Alvera said he was struck by how much hydrogen was in Europe's energy mix by that year. Beyond the abundance of hydrogen, the SNAM model also predicted that it would be the cheapest form of decarbonized energy for many sectors, and that it could be cheaper than today's prices for oil, coal, and nuclear power. Our Maria Tadeo spoke with Alvera at COP26.
It's happening all very fast. We see the cost of hydrogen coming down a lot. Hydrogen will play a big role in the energy mix. I don't know if it's going to be 15 or 25% of a fully decarbonized energy system, but it's going to be big. Costs are coming down, and people are waking up to the fact that it's the only way to decarbonize certain sectors, the so-called hard-to-abate sectors.
And you say it's the only way and the costs are coming down. Where do you see prices moving? Because a lot of the reticence at times has to do with the pricing, that some argue, well, it's still not the cheapest option on the market.
So when I was first working in hydrogen in 2004, it was costing $1,000 per megawatt hour. 2010, $600. Today, $100, and we see it going down to $50 in 5 years' time, and to going down to $25 per megawatt hour in the next 10 years or so, which is a quarter of where it is today. That's really because renewable energy, and we're talking green hydrogen here, renewable energy costs are falling, but the cost of making the electrolyzer, which is the kit that you use to convert solar or wind energy and water into hydrogen, the cost of this kit is falling a lot because it doesn't really exist on an industrial scale. So as we build up capacity, we industrialize it, we standardize it, and we squeeze costs out. That's really the cost trajectory.
And for that, of course, you need demand, however, for governments and also institutions to kind of buy into this idea that it is the future and we want to invest and create the infrastructure. What are they telling you? When you speak to governments, when you speak to officials, are they keen on this?
They're very keen. So the Department of Energy shares our view in the States of getting to below $1 a kilo, which is $25 a megawatt hour. The European Union has a hydrogen strategy, which is very clear, and several member states have the same. Chile wants to export a lot of hydrogen. China's big on hydrogen. Australia is very big on hydrogen. Japan is blending already hydrogen. So I would say the world is now really focused on this because it's the only way to store energy for a long period of time economically is to convert it into either a liquid or a gas.
And of course you talk about the price, but the other big component is the volume. You know, how big can you go? Where do you see that on a time scale?
So wherever it's sunny or windy, you can produce very cheap hydrogen eventually. And so compared to oil and gas, which are concentrated in few parts of the world, it's going to be very democratic from that point of view. So every sunny place, every desert, every ocean wind can be turned into hydrogen that we can put on ships, in pipes, and really start trading it around the world. So it's going to happen a lot faster than a lot of people think.
So, and when you say a lot faster, what is that in time?
As I said, $50, which is essentially oil parity within 5 years. And then, depending on how quickly we ramp it up after that, we could get to $25, which is coal parity before the end of the decade.
And in big scale.
In big scale, because once you get to coal parity, that's the only way we're going to get China and India to stop burning new coal. We have businesses in China and in India, and I see a lot of hydrogen development, a lot of renewable development in both countries. The India announcement was incredibly strong on 2030. Some people were upset about the 2017 net zero deadline, but when it comes to 30, he announced a big commitment to get to 50% renewables.
Were you surprised by it?
I was surprised that they would make it so explicit, and even the net zero is a big thing for them. And so I think it will happen faster than 2070 because of the falling cost of renewable and hydrogen. India's burning 80 gigawatt of oil, of diesel, to keep the lights on. So there's an immediate opportunity there, and we're very interested in working in that country.
And with regards to China, perhaps the fact that we haven't really seen them active, I guess the diplomats are working on this, but we haven't really seen the leadership.
It's going to be technology, it's going to be industry. I think China has committed to a net zero, which is very important. At the G20, China was clearly behind the 1.5 degrees. So I think a lot has been achieved between the G20 and COP, and I think what's really important is to see in the coming years how quick it's in our hands to make part of this happen in 5 years, or it could otherwise happen in 15, 20 years. It's about building the projects. The capital is there. We saw how many trillions of dollars are already committed. What's missing is really the projects, and that's where companies like us step in.
Marco Alvera, CEO of SNAM there, speaking with our Maria Tadeo. Let's turn now to the aviation industry. It's a big contributor to global greenhouse gas emissions, and it's under pressure to change that. In October, the International Air Transport Association, a trade body representing airlines, approved a target of achieving net zero emissions by 2050. To achieve that, many airlines in the US and Europe are looking to buy sustainable aviation fuel made from renewable sources like used vegetable oil. Initiatives like these are pushing plane makers to come up with some radical new aircraft that will eventually cater to our growing appetite for travel without hurting the environment. We took a look at how Airbus, the world's #2 aircraft manufacturer, is stepping up to the challenge.
How long until we can fly emission-free? Airbus says it's more confident by the day it can be done by its 2035 target. Airbus's CEO spoke about its ambitions for hydrogen-powered planes at the company's summit in France.
The physics works. Hydrogen technologies are not new. They are used in other sectors. We use them in space on our rockets, and we don't need the laws of physics to change to be able to use hydrogen on our planes. So every day we become more confident, but we think we need to have a plane, we need to have the right fuels, the hydrogen available in the right quantity at the right place at the right time, and we need the regulations to be ready. So we really need the work and the collaboration of many people around the globe to make it happen on time.
But it could be a long wait until green passenger jets go mainstream. Larger aircraft with more than 150 seats are not expected to feature globally until about 2050. That means manufacturers and airlines today are under growing pressure to ramp up short-term innovations to cut their carbon. In the long term, meeting the ambitious plans for so-called green hydrogen means building a giant industry almost from scratch. To make that happen, British airline EasyJet is among those saying governments need to get involved and fast. Aviation's emissions over the last 3 decades leading up to the pandemic grew by about 80% to over 1 gigaton, and that's projected to double by 2050. According to Bloomberg NEF, about half of the airlines with the largest global market share have set net zero targets by that same date, nearly 3 decades away.
Coming up, from blue sky projects to the bottom line. We'll speak with our Bloomberg NEF expert, Meredith Annex, and dig into their models about how hydrogen fits into the future energy mix. This is Bloomberg Green. From Bloomberg's world headquarters in New York, I'm Kaylee Lyons, and this is Bloomberg Green. Now let's bring in Meredith Annex, our Bloomberg NEF hydrogen specialist, to talk more about how hydrogen could change the energy landscape. So Meredith, what place do you think hydrogen is likely to have in the future energy mix globally?
Hydrogen's this incredible solution for us as we look to decarbonize because it's a perfect solution in areas that are hard to electrify. So where we like to think about hydrogen playing a role, it's in things like heavy industry, especially where you need a feedstock as well as energy source. and in things like dispatchable power, long-haul transport, maybe even shipping and aviation.
That sounds great that it can be used for such diverse industries. At the end of the day, though, how much is this going to cost?
Well, that's the amazing thing about hydrogen, because depending on how you make it, it can actually see significant cost declines in the future. So when we're talking about clean hydrogen, we usually mean green hydrogen produced from renewable electricity. And in that case, your hydrogen is almost as cheap as the renewables that are used to make it. So if you're in a place with really good renewable resources, you'll be able to have cheaper hydrogen. But even in places with less good resources, we think that hydrogen can be cheaper than $1 per kilogram, which is the price of unabated hydrogen today, and around $8 per million BTUs for those who prefer to think in energy units. And that can be achieved anywhere in the world by 2050, we believe.
All right, so let's talk about kind of the pros and cons list. I don't know where cost fits into that, but what are the advantages to hydrogen over other renewables, and then what are the drawbacks?
Yeah, main advantage is the fact that hydrogen can serve roles that electrons struggle with. And that's things like seasonal storage, for instance, or just anything where you need storability, where electrons are harder to store, hydrogen is going to be easier. That also leads to a downside, though, because hydrogen is less energy dense than the usual things that we use for storable energy today, like coal or oil or natural gas. So you will need more volume of storage to handle the same amount of energy.
Let's talk about the viability as well and how it may differ in different geographies. What is your view on that?
Yeah, so for green hydrogen, again, from renewable electricity, really places with the best renewable resources, things like Latin America or the Middle East, even Southern Europe, have really, really good potential for producing hydrogen. And then when you're looking at blue hydrogen, which is produced from natural gas or coal with carbon capture and storage, we do see that becoming more expensive than green hydrogen in the future, especially as renewable electricity costs come down. But that can be a viable option in places like the US Gulf Coast or Russia, where you've got good geological storage for the carbon, as well as ample natural gas that's quite cheap.
All right, great breakdown. Thank you so much to our Meredith Annex, our Bloomberg NEF hydrogen specialist. And of course, you can get more from the Bloomberg NEF team on the terminal and online. And they've recently done a podcast called Hydrogen 101 as part of its Switched On series. So from iron ore titans pivoting to cleaner energy to talk of a hydrogen revolution, that's it from this week's edition of Bloomberg Green. We'll be back next week with a deep dive into the state of electric vehicles. And you can keep the conversation going by following us on YouTube, Instagram, and Twitter @Climate. I'm Kaylee Lyons from Bloomberg's world headquarters in New York, and this is Bloomberg Green.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash. From Bloomberg World
World Headquarters. I'm Charlie Pellet. We have got the Dow, the S&P, NASDAQ, all trading lower right now. We are well off session lows on this post-Fed Thursday, with the Dow Jones Industrial Average now down by 5 points. We have got the S&P down 19, drop there of 0.5%. NASDAQ down 126, a drop there of 1.1%. As I speak, Dow Industrials just turning higher. The Dow up now by 1 point. Look at the 2-year, 4.09% right now. We have got the 10-year yielding 3.67%. Spot gold is down $2 the ounce to $16.71, drop there of 0.1%, while West Texas Intermediate crude oil is up 0.7%, 83.61 for a barrel of West Texas Intermediate crude. So it is now a mixed day on Wall Street. We've got the S&P, though, declining for a third session. Traders positioned for a more aggressive Federal Reserve in the months ahead as the fight to tame inflation around the world intensifies. As for the market backdrop and what we're looking at in terms of interest rates, Subhana Rajap is head of U.S. rate strategy at Societe Generale.
I still feel that broadly speaking, I think risky assets have corrected lower. If we start heading, significantly higher from here, I think you're going to see a lot of pain. The question for the Fed is how much pain are they willing to put up with, because financial conditions are tightening quite meaningfully, and as they're raising rates and getting closer to 5%, I think the pain is going to be widespread.
Credit Suisse says it is not true. It is not leaving the U.S. market, disputing a Reuters report. Credit Suisse says reports of its U.S. exit are, quote, categorically false. Amazon.com's first regular NFL season game drew 13 million viewers, according to Nielsen. Amazon shares down today by 1.3%. Recapping, S&P down 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Live from the Bloomberg Interactive Brokers studio in New York to our audience worldwide on radio, on YouTube, on Sirius XM. It's Bloomberg Business Week. It's Thursday, September 22nd, 2022. I'm Tim Stenovic, joined by Bloomberg News senior markets reporter, also the anchor of ETF IQ on Bloomberg TV, Katie Greifeld, in this afternoon for Carol Masser, and tomorrow as well. Katie, we've got, fair to say, a Fed hangover?
I was wondering what that feeling was.
Yeah. You got to drink a lot of water, okay? That's what you have to do. We're going to have more on the markets in just a minute. Speaking of markets, the end of boom times on Wall Street, and that means layoffs. But it is boom times for AirPods, the cover story of Bloomberg Business Week, and what AirPods' success could tell us about Apple's virtual reality ambitions. We've also got a great view into the C-suite this afternoon. We got the Chief Supply Chain Officer from American Eagle joining us, also the CEO of Connect One Bank for a look at regional banks and what the Fed means for those. And how about some comedy? Caroline Hirsch of Caroline's on Broadway will be with us a little bit later to talk about the return of the New York Comedy Festival. All that and more over the next 3 hours. First up, let's get to the Market Drivers Report. With us right now in the Bloomberg Interactive Brokers studio is Kriti Gupta. She's markets correspondent for Bloomberg. Sign up for her chart of the day, kgupta129 at bloomberg.net. Check her out on Twitter and Instagram at Kriti Gupta News. Michael McKee is international economics and policy correspondent for Bloomberg News. He joins us from the Bloomberg 99.1 studio in Washington, D.C. You can see us all if you are watching us on YouTube right now. And follow Mike in his Twitter account, at McConomy on Twitter. Kriti, I want to start with you and just get an update on the trade. What's going on here?
Well, I think you kind of said it at the very beginning. This is a little bit of the Fed hangover. The S&P 500 down about 0.7%. The NASDAQ really taking a hit, down 1.3%. But look, I would argue that all the action is going to be in the bond market. You're seeing a real repricing kind of underneath the hood. A lot of what is actually going to happen in the November meeting. 75 basis points seems to be the new consensus move. And in order to price that in, essentially basically means you're selling stocks and you're selling bonds, because that is a more aggressive move than was previously forecast. So the 2-year yield inching higher and higher. I think we were at 412 basis points at session highs today. And now, Tim and Katie, I think what's interesting is you're starting to see calls that are just 24, 48 hours ago were seen as very contrarian. Anna Wong, for example, said there's going to be a 5% terminal rate. She was out ahead of it. She got some criticism for it as well. And now you are seeing that start to get priced in, and more people change their forecast to a terminal rate of 4.7%, 4.8%, and some even saying Anna was right.
And of course, as we start to entertain thoughts of a 5% terminal rate, Mike, if stock bulls were looking for any solace from Jerome Powell yesterday, they did not get it. And let's talk about what he actually said and what he didn't say, because he didn't say recession, but it sounds like he just about forecasted it.
He just about did. The Fed can't say we're going into recession because then the markets would go into recession and Critty would be so busy she wouldn't have time to come on this radio show. But for the Fed to forecast a 4.4% unemployment rate over the next year is a sign that they do see a recession, because that would mean about 1.3, 1.5 million jobs lost, and we've never had that many jobs lost and not had a recession. So essentially they're telling us that's what's going to happen, and they're going to put up with it because it's worth it to get inflation down.
Hey, Mike, what else is going on when it comes to sort of the way that markets are digesting what the Fed chair said? I mean, I'm not asking you to tell us exactly what happened, because I don't think we can explain what happened as the Fed chair was speaking yesterday and kind of what's going on today. But we did get initial jobless claims. It kind of came in with expectations. I mean, what else are you watching here? Because it's kind of puzzling to me.
Well, I think you can get too close to the Bloomberg screen, as it were, and not see the forest for the trees or something like that.
I like that.
To mix metaphors. But it's a situation where a lot of individual markets are trading on different things. Certainly the currency market's trading on interest rate differentials. We saw some movement in the cable rate today because the Bank of England raised rates, but they didn't raise it enough as far as the markets are concerned. So that kind of trade's going on. As far as the equity markets in the U.S., no, nobody can explain yesterday. But I think what you want to be looking at is the major indicators that we have been following, and that's jobs and inflation. They're backward looking, but they do give us some sort of idea of where we are. And the jobless claims numbers look good in terms of what the next month's jobs report is going to look like. So you can see why people might be selling off today if they're worried about higher Fed rates, because right now it looks like that's what we're getting. Inflation's still high, but the economy is still showing signs of strength.
And Critty, let's talk about the concept of fighting the Fed, because it was striking to me yesterday that it was the first rate hike of this cycle where the S&P 500 did not end in positive territory. And when you think about stats,
you sound like a technical analyst.
Is that technical, or is that just checking the charts?
Checking the charts.
In any case,
in
any case, I'm on fire today.
Yeah.
This is my dang Super Bowl. But Critty, when you think about stats like that, I mean, is it safe to say that people have finally capitulated here, put down their armor?
I don't think it's capitulation. I think it's more of, look, I think the Federal Reserve has been very careful about messaging to the markets, and I'm sure Mike has a take on this as well, but the markets have quite literally had this sell the rumor, buy the news dynamic in the last couple of meetings since going back to 2022. That's why in the lead up to the FOMC decisions, you saw this massive sell-off and then kind of buying on the day of, which to your point, Katie, meant green on the screen historically. But then net, you were still losing money in the span of those, say, 3 days, Monday through Wednesday for the FOMC meetings. That has been the case for every single meeting except for this one. And the reason this one, I'll venture to say, was a negative day was because no one was expecting this change for November. And that's where you had to get the repricing. And also, on top of that, the double whammy here is that when you expect the change in November, which, by the way, the consensus was 50 basis points, you have to reprice in the bond market, and then the equity market has to reprice what the bond market is repricing, and that just equals a sell-off. That being said, take a look at what the S&P 500 is doing. It's only down 0.7%, and honestly, I expected it to be worse.
But still retesting, getting close to those lows that we saw back in June. A big thank you to both of you. Critty Gupta, markets correspondent for Bloomberg. She's with us in the Bloomberg Interactive Brokers studio. Michael McKee, international economics and policy correspondent, joining us from our Bloomberg 99.1 studio in Washington, D.C. Let's stay in Washington, D.C. and go to World and National News with Nancy Lyons. Hey, Nance.
Thanks, Tim. U.S. Secretary of State Antony Blinken is urging the world to hold Russian President Vladimir Putin accountable for the Ukraine invasion.
One man chose this war. One man can end it. Because if Russia stops fighting, the war ends. If Ukraine stops fighting, Ukraine ends.
During his speech before the UN General Assembly, Blinken warned the international order that the UN is supposed to uphold is being shredded before our eyes. Blinken says we cannot and will not let President Putin get away with it. Russians are now beginning to show their anger at Putin for mobilizing 300,000 more troops for the invasion. Hundreds have been protesting in the streets. The National Security Council's John Kirby says Putin is feeling the pressure.
It's become much harder for him to keep the truth from the Russian people. Mobilization was something that we know he wasn't looking forward to having to do because there's no way to hide it anymore, that they are struggling and that they need additional manpower.
Kirby says Russian families will be seeing a bigger impact of Putin's actions. The battle over abortion is playing out today in Indiana. A judge there has blocked the state's abortion ban from being enforced, putting the new law on hold as abortion clinic operators argue that it violates the state constitution. The judge wrote, quote, "There is reasonable likelihood this significant restriction of personal autonomy offends the liberty guarantees of the Indiana Constitution." Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Tim Stanovic and Katie Greifeld were live in the Bloomberg Interactive Brokers studio in New York. Katie, we got a story among the most read on the Bloomberg terminal this afternoon. It's about a former senior investment strategist at Goldman Sachs who is very familiar to our audience. We're talking about Abby Joseph Cohen. She's weighing in on what's going on with the erratic stock market reaction that we were talking about yesterday and today still, after the Fed raised rates, again showing just how confused investors are. What did she say?
She said that the equity market did not know what to do, and there
that makes two of us.
there was.
I didn't. I said on our simulcast yesterday, I don't know how to make sense of this.
I think it comes down to a pretty binary option.
Yes or no, up or down.
I feel like the bearish
buy or sell
take is, oh my gosh, the dot plot was revised so much higher than people were expecting. Rates are going to be way higher by the end of this year. I feel like the bullish take would be that, okay, but they're front loading all of those hikes. We're pretty much going to be done when we get into next year. And I feel like that's why you saw, just like Abby Joseph Cohen is saying, the really erratic behavior that we saw.
Yeah, she said there was really erratic behavior because equity investors were really confused. There's this yin-yang between inflation and higher yields versus will the economy and earnings continue to grow. The S&P 500 closed down 1.7% yesterday. It gained as much as 1.5% at one point. I know you were watching very close. Were you live vlogging?
I was not live blogging. I was live writing because we were expected to produce a story out of it.
You did 3 stories, right?
I got 3 read specs. I did 4 stories yesterday, but
all right. That's a big deal. So thanks for joining us on radio today to talk all about them.
Of course. Just to wrap up with Abby Joseph Cohen, she did say we are now at the point where, given the significant rises in interest rates and yields across the yield curve since the beginning of the year, the equity market is now focused much less on inflation and yields than it is on earnings. Of course, that's as the Fed is super focused on inflation still, Tim.
Yeah, we should remind you we are just a few days away from wrapping up the quarter here. So then we'll start to get earnings from the banks, and then we'll hear from more companies. So if those earnings get revised, we'll certainly hear soon. You're listening to Bloomberg Business Week on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Credit Suisse Group is denying that it is exiting the U.S. market following a Reuters report that the Swiss bank was mulling such a withdrawal for its investment bank. In a statement, the bank said Credit Suisse is not exiting the U.S. market. Any reporting that suggests otherwise is categorically false and completely unfounded. Credit Suisse shares, they're down right now by 5.9%. Treasury yields have surged to multi-year highs after a parade of global central banks joined the Federal Reserve in boosting interest rates to curb scorching levels of inflation at the expense of economic growth. The Bank of England delivered a second consecutive half-point increase in its battle to bring down inflation. The two-year yield, 4.10%. The 10-year yield, 3.69%. S&P is down 29, a decline there of 0.8%. The Dow right now down 82 points, lower by 0.3%. Have been positive briefly. NASDAQ now down by 166 points, a drop there of 1.5%. Spot gold, little changed right now. We've got gold at $16.70 the ounce, while West Texas Intermediate crude is up 0.4%, 83.26 a barrel. Red on the screen, down day for the U.S. stock market. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, if you go to the Bloomberg terminal, you type in READ GO, brings you to one of my favorite places, which is the most read on the Bloomberg terminal. The most read story in the last 8 hours is a story by our own Sri Natarajan, finance reporter for Bloomberg News. He's with us right now in the Bloomberg Interactive Broker studio. It's all about the changing times on Wall Street. So Sri, if we were talking a year ago, we'd probably be talking about Goldman Sachs and other big banks raising wages for junior bankers and really saying, okay, well, they got to come back to the office, but not really come back to the office and just make sure they're available. But, it was a different time on Wall Street.
12 months ago, there was a sense of giddiness across Wall Street. September 2021, you would have been really looking forward to end of year and the bonus conversations that would have followed, because you would have seen big payouts. And we did see record payouts all across Wall Street for 2021.
That was then, this is now. What's going on now?
The tunes changed, the music stopped. You get this sense that the boom times that we saw for the last couple of years that allowed for a lot of these junior bankers to assert themselves, to feel like they could ignore the pleas of their top brass, refuse to come back into the office, and still have a very good time of it all. That's not happening. You really cannot buck top brass anymore. Annual culling is back. You can be guaranteed that you will see year-end payouts plunge at the end of this year, because the comparison to last year is just not going to be pretty. And that has meant that you will see a lot more dour faces on the street.
It's so interesting to hear you describe the past few years as the boom times, because it's been a really weird past few years, obviously, with the pandemic. Talk to us about that disconnect, why we're seeing sort of the end of the party now, why we might see layoffs now versus maybe 2 years ago.
And it all, we'll go back to March 2020 when we thought the world was coming to an end. Everyone feared about what was next. But what happened in the ensuing months, the April and the Mays and the Junes when it came around, it didn't feel like the end of the world. You had central banks across the globe stepping in and making sure that there seemed to be some sort of a safety net, at least for the financial institutions. Of course, there were massive help to everyone in the real economy, in the real world, and things were not as dire in terms of what would happen to the consumer and the economy. There were, of course, devastating effects of the pandemic. But if you were a white-collar worker, and that's important because really, if you were in that part of society where your job was guaranteed, you don't have to worry about going to the office every day, your company seemed to be printing record profits, everything really was good. And that was the story of 2021 and 2020, and most certainly about 2021.
Yeah, it's pretty wild, just given how quickly things have shifted, and also how quickly things got okay after, in the midst of the pandemic, with the government shelling out all of this money, which, ironically, we're kind of paying for right now, Sri. You got a great anecdote at the top of your story about what's going on at JP Morgan. Take us into it.
It's this idea when you had, in the depth of the pandemic, Jamie Dimon one of the return to office stalwarts. Like, let's point out, like many other CEOs of his vintage, he wanted people back in the office. And people below him, the managers 1 or 2 rungs below, knew that it was going to be really hard to convince everyone to be back in the office 5 days a week. So they developed this, let's call it an unofficial strategy, just to make sure that the floors were lined up with just the kind of people that Jamie would want to talk to, the managing directors, for instance. The rest of them, more or less, could continue with the leeway that they had for the last few months, and that's how it panned out. You had to have these managers resort to tactics like that to please the biggest bosses and yet keep their workforce happy.
I should note, as you point out in the piece, Sri, Joe Evangelisti, a spokesman for the bank, says that such assertions that such a system existed are, quote, false.
Yes, Jamie would never be a hard taskmaster is the impact of that statement, I guess.
Well, this annual coal that could be coming, as you write, compare it to past instances of this. Compare this to 2008, to the late 90s. What exactly could be coming the way of the big banks?
Go further back, 1987, late 90s, 2008. This is nothing compared to that. But it does mark a significant shift from the last couple of years, and that's what is important. You had this sense that the CEOs on Wall Street had to be the do-gooders. They had to care for their workers. They had to make sure that everything was okay through a challenging period. Now you're returning to what should be the norm, right? Wall Street's thrived on this brutal ritual of, towards the end of the year, you want to cull your underperforming staff. They believe that instills financial discipline, but that does mean a lot of jobs are lost. It's roughly, say, 1 to 5%, and even with the Goldman Sachs announcement, we believe that it'll be closer to the lower end of the range. But it does mark a clear and distinct change in how Wall Street operates. And going forward, you will see a lot more following suit, because at the end of the day, bottom line is not keeping up. You cannot afford not to make those hard decisions.
Shri, 30 seconds. I mean, I know I'm asking you to look into a crystal ball here, but like, how quickly can something like this change and go back to boom times?
That's a hard one. If you listen to some of the legendary traders out there, you have someone like, I think, Druckenmiller, who was out last week talking about this idea that the stock market could be flat for the next 10, 12, 15 years. The Fed is still in the middle of this rate hike blitz, and how it ultimately plays out both in the real economy, the financial economy, and whether there will be this snapback in markets, it's hard to paint a scenario where that happens quite immediately.
Sri Natarajan, finance reporter for Bloomberg News. His story, the most read in the last 8 hours on the Bloomberg terminal. Check it out on the terminal and, of course, at Bloomberg.com as well. He's with us live in the Bloomberg Interactive Brokers studio. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stanovic and Katie Greifeld. We're live in the Bloomberg Interactive Brokers studio. In just a couple of minutes, we're going to check in with Dr. Andy Pekos, professor of molecular microbiology and immunology at the Johns Hopkins at Bloomberg School of Public Health. Time to get an update on that booster, that new booster that just came out, that Moderna, in fact, is saying has seen some pretty high demand. We're going to get to him in just a minute. First up, though, Charlie Pellet, we got less than 90 minutes to go. What's going on?
Andy, what's going on? Red on the screen. We were higher briefly on the Dow. That was roughly 30 minutes ago, Tim. But right now, the Dow, the S&P, NASDAQ, all back in the red. Choppy trading session today. Post-Fed hangover, as you guys suggested earlier on, with the S&P now down 33. Drop right now of about 0.9%. The Dow is down 107. Decline there of 0.4%. NASDAQ, the NASDAQ Composite Index, down 182. Down by 1.6%. The NASDAQ 100 Index down now by about 1.4%. The two-year yield, 4.10%. 10-year yield, 3.69%. Spot gold down $3 the ounce to $16.70. Little change there, down 0.2%. West Texas Intermediate crude oil up right now by about 0.6%. 83.45 for a barrel of WTI. Well, given the selling this year for stocks, given the losses, where to invest? Lisa Shallot is Chief Investment Officer for Wealth Management at Morgan Stanley.
You know, underneath the surface of the S&P 500 index and even the NASDAQ indices, you know, we're finding real opportunities. There has been carnage in this market. We know that in small and mid-cap land, there's been carnage. We know that there's a host of sectors that have sold off aggressively, including things like home builders. You know, again, contrarian perhaps, but where, you know, a lot of the bad news or likely news is discounted.
And we do have a number of headlines involving FedEx now crossing on the Bloomberg Professional Service. Got to keep in mind that FedEx have been scheduled to report after the close of trading. We got the pre-announcement last week from FedEx, but right now, let me begin with the red headline on the Bloomberg. FedEx expects to generate cost savings of $2.2 billion to $2.7 billion in 2023. Says it's going to reduce flight frequencies and temporarily park aircraft. FedEx also says it will increase some delivery rates by an average of 6.9%. FedEx shares right now, they are rallying on the news. FedEx up by just about 2.2%. So again, news from FedEx. We're going to follow the story and get more details as they become available. But again, key takeaway, getting numbers, details from FedEx. That stock is trading higher now. FedEx up by 2.3%. Recapping, two-year yield 4.10%. S&P down 0.8. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it. Well, you probably saw the news earlier this week that some pharmacies were reporting shortages of Moderna's new bivalent booster shot for COVID-19. This is one factory used in producing the vaccine remains offline following a safety inspection. We're pleased to have with us this afternoon Dr. Andy Pekos, professor of molecular microbiology and immunology at the Johns Hopkins University Bloomberg School of Public Health, joining us this afternoon on the phone from Washington, D.C. The Bloomberg School of Public Health, it is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Dr. Pekos, great to have you back with us. It has been a while since we've last spoken. What can you tell us about the rollout of the new booster that just started a few weeks ago, and to what extent that people are actually taking it? Because we're not seeing the lines that we saw when the vaccine first came out.
Yeah, so it's a little bit early in the process, and there have been some problems rolling out the vaccine. So we're still waiting for some of the first few solid numbers to come in from this. But one thing I'd like to emphasize to everybody is this bivalent vaccine is really going to do two things. It's going to strengthen your previous immunity induced by the vaccine, and it's also going to give you specific immunity to the new BA.5 variant that is circulating right now. So it really is a vaccine that could be really important in terms of continuing to limit COVID cases and severe COVID cases going forward.
And so, Dr. Pekosh, like you mentioned, this new booster, it's specifically going to help with one of the variants. And as variants continue to rise, does that speak to a future where boosters are just a part of normal life? The normal,
like a flu shot
like
every year?
Exactly, Tim.
Yeah, we haven't made that decision yet. It's somewhat going to really depend upon how this bivalent booster vaccine rolls out and how we see the variants respond to this bivalent booster. So really, we know that the immunity is going to be stronger. Whether this immunity lasts for a whole year or 2 years is really something we're going to have to wait and see. People getting the BA.5 booster vaccine right now are going to be followed for several months. And so sometime in the winter and early spring, we'll really get a sense of how long the immunity is from this vaccine. And I think that'll help determine what our plan is next year for COVID-19 vaccines.
Okay, I might be crazy, but I kind of feel invincible right now because I had COVID a month ago, and I spent the last, 2+ years just running around the office and everywhere I went with a mask on.
That's not a normal state of being for you?
It's not, even though you didn't meet me before the pandemic, but I didn't wear a mask.
No.
And now because I had COVID, I got to tell you, Dr. Pekosh, it's like really freeing for me because, I went to a huge event yesterday, didn't wear a mask. And my doctor even told me I can't get the new booster until November because I did just have COVID. Am I kind of fine to be living life back to normal because I should have pretty good immunity?
Yeah, while we don't want anybody to get infected, the best timing to get infected is after you've been vaccinated, because then the severity of the disease is going to be lowered, and essentially that infection then serves almost like a booster. And so that combination of getting vaccinated and then getting infected is giving people a pretty good immune response that can last for several months. Now, this bivalent booster is just going to strengthen that. And so your doctor was right in recommending that you wait a little bit before you get it, because you want some time between those exposures to let your immune system settle down and to get you to induce those long-term memory responses. But this really is setting us up for a really nice population that's going to have a lot of immunity that should limit case numbers as well as disease severity.
And we only have about 40 seconds left, but I would imagine there's a lot of people like Tim who do feel invincible right now. Are we going to ever be able to say that this pandemic is truly over?
Well, I know pandemic being over has been controversial lately. What happens with pandemics like COVID-19 is they become seasonal outbreaks like we see with influenza. And what we have to remember is we now have vaccines, we have testings, and we have antivirals. What we have to do is keep using those three things to limit severe COVID, and most of us will then be able to go back to a somewhat normal life like we had before the pandemic.
Yeah. Sooner than later is what I hope for, but it's certainly just starting to feel like it is normal. Dr. Andy Pekosh, professor of molecular microbiology and immunology at the Johns Hopkins and Bloomberg School of Public Health. The Bloomberg School of Public Health, it is supported by Michael R. Bloomberg, the founder of Bloomberg LP and Bloomberg Philanthropies. Well, let's stay in Washington, D.C. right now and head over to Nancy Lyons for an update on world and national news. Hey, Nance.
Thanks, Tim. U.S. Secretary of State Antony Blinken says Russia cannot be trusted, and he's calling on every UN Security Council member to condemn Vladimir Putin for his nuclear saber rattling over Ukraine.
Every council member should send a clear message that these reckless nuclear threats must stop immediately.
In a speech to the UN General Assembly, Blinken said it was just months ago Russia signed a UN statement affirming that nuclear war could never be won and must never be fought. Russia's foreign minister also spoke at the UN and denied any responsibility for war crimes and instead blamed Ukraine for atrocities. Attorney General Merrick Garland is going to have to make some decisions about whether Donald Trump will be the first former U.S. president to be charged with a crime. Bloomberg's Amy Morris with the story.
Garland's decision will likely shape American politics and the boundaries of law enforcement. Officials say the Justice Department likely already has enough evidence to support indicting Trump for obstruction. The probe into whether he compromised sensitive national secrets could also set up a prosecution decision after the November 8 midterms. Any decision by Garland is sure to stoke political passions in the coming presidential race, and it could set a precedent for whether criminal law extends to presidents. In Washington, I'm Amy Morris, Bloomberg Radio.
A new poll suggests there will be a record turnout for November's crucial midterm elections. Roughly 64% of respondents in an NBC News poll said they had a very high interest in the midterms. A similar poll in 2018 found very high interest among 58% of respondents. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. Really appreciate it. Katie, we're going to be talking about the cover story for Bloomberg Business Week in just a minute. It's all about a tech firm out in California. You might know it, hardware firm called Apple.
Yeah.
Great story by
It
Max
sounds
Chapkin.
familiar,
Yeah.
I have to say.
You have an iPhone.
Yeah, she's right here.
I did not know she was a she.
She's a lady.
Okay.
Anyway.
But before we do that, let's talk about another Silicon Valley firm. This one a little bit newer and focused more, well, in this day and age, on the metaverse. Meta Platforms, the parent company of Instagram, Facebook, WhatsApp, and more, is planning to protect users from unsolicited nude photos.
Yeah, quote, nudity protection. It's going to be an optional privacy setting similar to the hidden words feature that launched late last year, which of course filters out messages that contain abusive language and emojis. Using machine learning, Instagram is going to prevent nude pictures from being delivered. The company also won't view or store any of the images. I guess it's going to be the robots judging whether you are naked.
Yeah, I think that it will be the robots. The feature was first reported by The Verge, and it addresses persistent complaints of abuse on social media, on the social media application. Do you ever use the mute button on Twitter to mute words?
Oh, man. I sometimes mute conversations when I'm mentioned in a thread and it just gets out of hand.
Like if you get retweeted by a huge account?
Yeah, and then just people are arguing in the replies.
It's like, get me out of this canoe.
I have blocked a lot of people.
Okay, well, I ask because, you know, oftentimes if there's like a big series or show on TV and I don't want any spoiler alerts,
Oh, man.
I'll mute certain words.
You know
and
what
I
I've
realized
done?
the other day,
Yeah.
well, I realized the other day that I wasn't seeing certain tweets because, like, I had forgotten to remove those muted words
was
from
the
my
show?
list. I think it was for Succession last
I
year.
did that for Game of Thrones, actually,
and
before the finale.
Yeah, and I forgot how to, I have to figure out how to go back and unmute them because I'm missing some tweets that, you know, may be relevant to me.
Perhaps, but to bring it quickly back to Instagram nudity protection, it's still in the early stages of development. They are working closely with the experts, according to a Meta spokesperson.
Check out this story. It's on the Bloomberg terminal, along with much more reporting. This is Bloomberg Business Week on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. FedEx shares, they're now up by 1.85%. FedEx says it expects to save as much as $2.7 billion this fiscal year as a result of wide-ranging cost-cutting measures in response to weakening business conditions. That word coming in a regulatory filing. Last week, you recall, FedEx had that 21% plunge after withdrawing its earnings forecast. FedEx shares right now, they're up by 1.9%. Credit Suisse Group is denying it is exiting the U.S. market following a Reuters report that the Swiss bank was mulling such a withdrawal for its investment bank. Credit Suisse shares, they're down now by 6.4%. Treasury yields have surged to multi-year highs after a parade of global central banks joined the Fed in boosting interest rates to curb scorching levels of inflation. We do have the 10-year yielding 4.11%, the 10-year yield 3.69%. Stocks lower across the board. S&P now down by 33 points, drop there of 0.9%. The Dow down 97, a decline of 0.3. NASDAQ is down 182, a drop of 1.6%. Spot gold down 0.2%, $16.70 the ounce. West Texas Intermediate crude up 0.4%, $83.23 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, the new issue of Bloomberg Business Week magazine, it's available on newsstands now, and it's got a great cover. We got Tim Cook just lying on a bed of AirPods right now. The cover story is by Max Chafkin. He's a columnist for Bloomberg Business Week. He's also the author of The Contrarian, Peter Thiel and Silicon Valley's Pursuit of Power. With us right now in the Bloomberg Interactive Brokers studio, along with Max, is Joel Weber, the editor of Bloomberg Business Week. I loved this story, Joel. And I don't know if it's because I think that AirPods should be in the services category of Apple, because they should just be a subscription, because I've lost like 3 or 4 pairs over the last few years. But this is one that we can all relate to.
We'll talk about losing an AirPod later. In the meantime, it's actually just an amazing success story. And when Max first started talking about this, it was like, we might not be able to break out the revenue on its own because of how Apple kind of does its numbers. But like, wow, if AirPods were its own company, it would be massive. How massive, Max?
So yeah, as you said, Joel, Apple considers AirPods to be so irrelevant that it doesn't report this. But when you look at third-party estimates, we're talking about probably 120 million or so pairs sold last year. That works out to roughly $20-ish billion. So if AirPods were its own company, it'd be one of the large companies in America. And the fact that it's considered to be this kind of sideline thing is partly just a testament to Apple's utter dominance.
Does Tim Cook get enough credit for this? Because you write in here, and I love this line, that basically critics are saying that he's been managing the extremely lucrative decline of Apple.
Well, I would argue that in general, people are don't give enough credit to Tim Cook, because obviously the market cap has gone up dramatically over the last 10 years. There have been all these successes. Each time Apple does something, everyone makes fun of it. We had that with the watch, we had that with Beats, we even had that with AirPods, where the big story was how dumb they looked, and they do look dumb. On the other hand, they've been very successful.
Okay, I'm sorry. Speaking of things that look dumb, Google Glass.
Well,
hold on. I'm sorry. No offense, Google Glass. I remember when these things came out, like a decade ago, and there's this great picture of Mark Andreessen wearing them because they raised this fund at Andreessen Horowitz, totally focused on Google Glass. Here we are a decade later. We're all walking around wearing Google Glass. Oh, no, we're not. We're not all walking around wearing Google Glass. But the reason I'm bringing this up is because this is what your story is also about, Max. It's like, what are VR ambitions for Apple, and what can AirPods tell us about those?
Well, I do think that if Google had tried to do what Apple did with AirPods, it wouldn't have been as successful. And one of the reasons it was successful is both because Apple's really good at marketing stuff, but also because it has this ecosystem. And they effectively have locked more than 100 million people into their system, so that once you've got an iPhone, once your family has an iPhone, it becomes very hard to leave it. And I think we could see a similar dynamic with the VR headset. I think it's for sure that people will be disappointed when that thing comes out. But we've seen that over and over again with Tim Cook's Apple, where the watch was kind of mocked, AirPods were kind of mocked, and I'm guessing this one will be too. And yet, like, insofar as VR is a category, which people could debate, I think if it is a category, it will be significant for Apple.
Okay, so this category that AirPods is part of, wearables, home, and accessories, fastest growing line of business. One reason for that might be because, what happens when you lose your AirPod, Max? What do you have to do?
Well, so as I wrote in the story, I've had 3 pairs of AirPods. I don't even really like them, but I just keep buying them because, they break or they fall out. And even this morning, I was riding the train to work and one fell out and I did not notice that it had fallen out. And so that's another $70.
I think that's called karma.
Yeah.
Tim Cook actually ordered that on you.
He sent a little vibration to
you can't make that up. So within that category, just talk to us about why that category has been growing so fast.
Well, it's 2 products. It's the Apple Watch and it's AirPods, and AirPods about half of it. The Watch is a pretty significant chunk as well. And I do think it's kind of weird. Wall Street loves to create this dichotomy between services and products. That's a dichotomy that Apple likes because services are growing very fast and they're very profitable. But it's not totally clear to me why you would consider, for instance, iCloud a separate business when really what it is like an add-on thing you buy with your iPhone. Your iPhone doesn't work without it. And I think in a lot of cases, like these businesses have sort of merged where they're all just sort of part of this overall iPhone subscription that we're all paying, close to $1,000 a year for.
Can you talk a little bit more about that bundle? Because, and I'm not going to give away the whole piece, but that's a big part of it is sort of builds up to this idea that, okay, well, it's not just the hardware that we're paying for anymore.
Right, and Apple's begun to, even in the way they package the iPhone, where they're starting to push a little bit harder on financing. You finance it through the Apple Card. There's also this upgrade program, which is like an even more expensive subscription. And I think when you look at music, as well as iCloud especially, those 2 things are very much things you sort of need if you have the iPhone, if you want to get the best experience. And Apple, I think, has been very strategic in kind of limiting competing services to make those services more appealing.
There's no better way to get me to shell out money, Joel, than by me being concerned that I will lose pictures, for the last 5 years.
So you're doing that? Yeah, okay.
iCloud
So you're
for the whole family.
Yeah, okay. So the hook is just totally set.
Oh, yeah. Forever.
But relating to that is this thing, Max, when, if I have an iPhone, my text messages are a certain color, and if I don't have an iPhone, they come up differently, and that seems like a pretty easy problem to solve, right? And even though the story is ultimately about AirPods, that gets us to a bigger story about Apple. What do you say there?
Yeah, as I said, this is, I think you could use this across their business as a framework to understand the company, and certainly with text messaging. We actually saw on the same day that Apple introduced the AirPods, Tim Cook was at a conference, got a question from somebody whose mother is an Android user complaining, hey, how come she can't see the videos I sent her? Cook's answer was pretty straightforward. It's buy her an iPhone. And I think that is very revealing. What they want to do is create this overall experience that's better, keep other products, competing products out of that experience, and use it to further drive sales. And people have been acting as if this is limited. At some point, they will run into limits, but they obviously haven't run into them yet.
Okay, so you're down an AirPod. Do you buy the old AirPod, or are you just going to get the new AirPod that ultimately the story's pegged to?
I mean, there's what I want to do, and then what the genius Apple marketers are going to make me do. But I think I'm going to stick with the 3rd gen, which is the cheaper AirPod, just because I lose them so often.
It was like perfect for this. I found 2 AirPods outside my apartment building yesterday, and I just felt so bad. I put them in kind of this lost and found in our building. If they're unclaimed,
I have one for you, Max.
I'll
bail you out.
Sadly,
we've all seen those sad AirPods just lying there on the ground. We got to run, guys. Check out Max's story. It's the cover of Bloomberg Business Week this week. Max is also the author of the new book about Peter Thiel, the contrarian. Also with us, Joel Weber, the editor of the magazine.
Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. Just 60 minutes left in the trading session. Caroline Hyde, Romain Bostic, Taylor Riggs, joined now by our colleagues Tim Stenovic and Katie Greifeld in the house for Carol Massa. Together, we welcome, as we do day in, day out, TV, radio, YouTube. Now, before Romain makes a snide remark about where Carol is, let's get to what overall, this is a day where we see, once again, the market really starting to fall. Although, interestingly, the Dow breaking into the green just at this moment.
Well, are we allowed to talk about the Dow, Romain?
You can.
Okay.
I give you permission.
Okay. We can talk about the Dow a little bit. You know what's not in the green today? Travel stocks. Once again, for a third day, we're actually seeing airlines under pressure. And this is over fears of a recession, that the Fed is just going to tip the economy into recession. Look at this. The S&P Super Composite Airline Index down more than 4% right now. All 10 members of it are lower. We got Sun Country Airlines and JetBlue Airways really weighing on it, down both close to 7%. And airlines continuing to be under pressure. Down, the sector's down about 26% this year versus about 20%, 21% for the S&P 500.
And obviously, it's a big bond market day. A lot of pressure coming from the Treasury market. Also, the investment grade credit market. We're looking at LQD here. This tracks investment grade debt. It's down at its lowest level since March 2020. Of course, it's declining 1.4% today. Pretty tough time all around.
That's weird, because we've had so many guests saying, time to buy investment grade. Meanwhile, let's look at the majors very quickly, because as I said, the Dow just popping into the green. We're up just 6 points at the moment. It's basically flat. The S&P still well underwater by 0.5%, but we're off our lows. We're off by 19 points. The Nasdaq off by 1.2% as yields crescendo ever higher. Russell 2000 off by 2.3%. Small caps in the line of fire today, Taylor.
Sort of that 50-50 push-pull narrative underneath the surface as well. Take a look at one of our great functions here, GRR or IMAP, and really like it because it shows sort of the sector level. Getting a little bit of green up there. Healthcare, of course, has been a big winner today. Romain. Staples as well, as we're digesting some of that sort of inflationary concerns that are underway in the staples, the outperformer. At the bottom, though, financials and discretionary, and I only point to financials given the huge rate of change increase that we've seen in yields, but again, further inversion of that yield curve.
Yeah, we talk about the economic picture. That is what people are taking a look at here. I thought it was interesting. We've been talking so much about the slowdown in IPO issuance and also the slowdown in credit issuance as well, and that's having a big effect here on some of the credit rating companies, including Moody's and S&P Global. Moody's down 4% here on the day right now. It's actually down here for an 8th straight session. This is the longest losing streak that we've seen on this stock going back to 2012 here. So a lot of concerns here about the fact that there's not a lot to do right now if you're in the credit rating business. Maybe that changes and maybe it doesn't. I also been talking a lot about the storage companies. They continue to be the biggest decliners that we've seen over the past couple of weeks, down for, I think this is now a 10th straight day. It's basically the longest losing streak on record. Extra Space Storage down about 2%. CubeSmart also lower here on the day. Meanwhile, you are getting a little bit of a lift here today from some of the big cap tech stocks. Alphabet shares up more than 1% here. Some people think they will be a little bit more resilient, assuming we are headed for a recession. And real quickly, Tesla shares down about 4%, kind of caught up more in the broader downdraft, but there was that NHTSA recall a little bit earlier today, 1 million vehicles because of a window issue that Elon Musk tweeted out says isn't an issue and that it will be fixed soon.
Okay, all eyes on those windows if you're currently driving your EVs. Let's look at a great chart that Romain brought to our viewers at the top of the two. It's so good we repeat it. G10 central banks over the course of just, what was it, 24 this week, we've had 300 basis points, 3 full percentage points enacted in terms of your moves by just G10 central bank rates. And of course, Tim, we've actually had plenty of other central banks taking action, although Turkey, you sort of have to put them to one side.
Well, this is the concern here, that it's not just the U.S. that's tightening policy here, and that there could be a global recession on the horizon. You guys remember yesterday, I was in the simulcast, and I was talking about how puzzled I was with the equity market moves that we saw yesterday. I mean,
are you
down?
unpuzzled?
I'm not, but
Have you worked
I
it
have
out?
great news. I wasn't the only one who was puzzled. I wasn't the only one who didn't know what to do. Columbia Business School professor Abby Joseph Cohen, formerly of Goldman Sachs, says that equity markets did not know how to react to the Federal Reserve's rate decision. She was on Bloomberg TV a little earlier today. Check out what she had to say.
The equity market didn't know what to do. First it was up, then it was down, then it was up, then it was down big time. There was really erratic behavior because, to your point, Lisa, equity investors were really confused because there is this yin-yang between inflation and higher yields versus will the economy and earnings continue to grow?
That was Columbia Business School professor Abby Joseph Cohen speaking earlier to Bloomberg's Lisa Abramowitz. Katie, I guess the idea here is that there was just so much confusion yesterday, and the equity markets have had 24 hours to digest those comments. And unlike we've seen, with Fed decisions past or Fed press conferences past, we're seeing stocks lower again today.
I think if you break it into two takes, which is how I've been viewing the market reaction today, the bullish take would be, oh my gosh, they're going to be done hiking by early next year. The bearish take, which seems to be prevalent right now, is, man, we have a lot of rate hikes to get through before we get to the end of the year. That causes a lot of revaluation that isn't yet priced in, given that if you looked at the expectations for what the dot plot was going to be revised up to, it was revised much meaningfully higher.
Well, yeah, and I think it was those economic projections, and the idea here that even if they do get to that terminal rate in early 2023, which it looks like they may not, the idea is that they're not cutting anytime soon, at least if you believe what Powell said. Big part of the reason why you saw the moves on the 2-year. And Taylor, I know we've been talking about it earlier today, the belly of the curve now getting in on the action here, massive sell-off, 15, 17 basis points on the 5 and 10.
You'll have to correct me if I'm wrong. A 10-year yield that's the highest since 2011. I think that was near some of the taper tantrum comments from Bernanke around that time. I'll have to go back and check my history books. I bring you another one for the history books as well. A 2-year yield that rises 11 straight days. That is the longest streak on record that we have going back to 76. The previous record of that, 83 and 88 under Volcker.
And we have to start talking about these correlations again. When you start having the stocks and bond sell-offs on the same day, and of course also weakness in the commodity space and a dollar that's basically flat here. I mean, what does that tell you? I mean, there really is no place to go. Either you're invested in this market or you're on the sidelines in cash.
And this is a global issue, right? It hasn't just been Fed hawkishness from the Fed. We've had hawkishness from the Swiss National Bank. You've had it coming from the Bank of England as well. But the actual fact that only 50 basis points, that now half a percentage point move by a central bank isn't good enough anymore. You need to be going further and faster. The FX movements in that respect are enormous.
All right, well, we got to wrap it up now, but there's plenty to talk about when we join you guys in just about an hour for our Beyond the Bell coverage of the
Carol
U.S.
be here
market
for that
close.
one?
She's not.
Sadly, it's just me. I'm sorry.
And Katie's going to be with us tomorrow as well.
Yippee!
Join us for Beyond the Bell. It's
Buckle
on Bloomberg TV, Bloomberg Radio, and on YouTube.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Katie Greifeld in for Carol Masser this afternoon. Katie, talk a little bit more about the sort of bullish versus bearish take here, because I really like what you had to say about this idea that so much of the dot plot really changed, the summary of economic projections. But at the same time, that doesn't explain for me that we got no new information as stocks gyrated yesterday. We got no new information when... Meaning that Powell's speech was basically what he said at Jackson Hole? Exactly. And even the answers to his press... and the stocks... I'm going to let you talk in a second.
No, I think it's great. You're excited. Go on.
The stocks really didn't move lower until he was done speaking. So was it everybody who sort of weighed in? Was it all the notes that banks sent afterward?
It was... To your point, I think it was the last 36 minutes of trading, maybe 32 minutes, where all of the losses came. It was really, really just a rough ride into the close. I think it was just people, a knee-jerk is a knee-jerk. Sort of the dust needed to settle a bit. But, to the point that markets are forward-looking animals, the new information was in that his stance hasn't changed at all, because we had 3 very key data points between Jackson Hole and between Powell's speech yesterday. We had 2 CPI prints, a labor market print. I hope I didn't mess those 2 up. And still, their stance hasn't changed.
Does it give you something good to write about for your newsletter tomorrow?
I have so much to write about. I write a weekly bonds newsletter. It comes out 5 a.m. on Fridays. I write it in just a furious haze over the course of 3 hours on Thursday nights.
All right, well, you got plenty to write about tonight, and of course with everything that happened this week. And the week is not over. Quick check of the markets. We still see the Dow up by 0.1%, the S&P off its lows down 0.4%, but the tech stocks, the NASDAQ, taking the brunt of it down a little more than 1%. To world and national news, and Nancy Lyons we go in Washington, D.C. Hey, Nance.
Thanks, Tim. 5 days after Hurricane Fiona made landfall in Puerto Rico, nearly 1 million households there remain remain without power. President Biden held a conference call with Puerto Rican officials today while he visited FEMA offices in New York.
We're surging federal resources to Puerto Rico, and we'll do everything we can to meet the urgent needs you have, and we know they're real and they're significant.
Biden also announced that 100% of funding needed for search and rescue and power restoration will be covered by FEMA. Fiona is now bearing down on Bermuda. As the Federal Reserve raises interest rates to combat inflation, its cause is a partisan issue, including among former White House economists who testified today before a House Government Operations Subcommittee.
Meat, grain, drugs, broadband, air tickets. Robert Reich blamed the handful of companies that dominate each industry.
2/3 of all American industries have become more concentrated. Conglomerates are raising prices and increasing profits because they can.
Tyler Goodspeed said it's supply and demand.
We had a deficit-financed fiscal stimulus equal to almost 10% of the entire annual output of the U.S. economy.
And consumers know there's inflation, others said, means companies can raise prices more easily. In Washington, Irv Chapman, Bloomberg Radio.
The Fed isn't the only central bank around the world raising interest rates. The Bank of England raised rates by 0.5 percentage point today. The Swiss National Bank increase came in at 0.75%. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons. Tim Stanovic and Katie Greifeld in for Carol Masser this afternoon. Katie, we're talking earlier about the wild swings that we saw yesterday. We're seeing the S&P 500 off of its lows of the day, and indeed the Dow actually up 0.2% right now. The question is, what is an investor to do, especially an investor who's got some cash to deploy?
You know I'm kind of obsessed with this theme, this idea that cash is its own asset class right now. I mean, you can get comfortably above 3% on a treasury bill right now. This is a really interesting story on the Bloomberg today by Lou Wang, that if you look at what Jeff Molenkamp is doing, he is the Pennsylvania-based manager of the Molenkamp Fund, which is beating 97% of its peers over the past 3 years. Half of his fund, almost 45%, is in cash right now.
Here's what he said. My anticipation is that something around the world is going to break, and it's going to be something that's big enough if it gets the Fed's attention. He said this earlier. I want to be a choosy guy with cash who can take advantage of that golden opportunity when somebody has to sell it, regardless of the price.
Choosy guy. I like it.
But it makes sense. If he thinks that values are going to go down, he wants to have some dry powder on the sidelines ready to pounce.
And your dry powder, it's actually earning you, again, a pretty respectable yield right now when you consider all the money you could be losing if you were still trying to time the stock market. So after disposing a majority of his holdings in Apple and Microsoft since the summer of 2021 while enjoying fresh inflows, Jeff Molenkamp, he's playing defense. Again, 45% of his total assets in cash. Usually his fund is only 2 to 3% in cash. So it really is a sign of the times, really speaks to the mood in markets right now, people looking for defense.
The question, though, is when exactly to get in. So, a spike in unemployment, a surge in borrowing costs, a disruption in the treasury market, or troubles for other countries because of a strong dollar, all potentially ominous outcomes from the Fed's intensifying war against inflation. Check out this story and more, available on the Bloomberg Terminal. You're listening to Bloomberg Business Week on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks are trading mixed. We do have the Dow Jones Industrial Average higher, the S&P, NASDAQ. They are both lower. It has been a volatile session. And here with all the details, let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks mixed in a very choppy tape. Dow's currently up 48 points. S&Ps are down 11. NASDAQ still lower by 92. The U.S. 10 yield at 3.7%. The 2-year is at 4.11%. Gold is little changed. Oil is in the green, and Bitcoin is trading higher by 1.5%. Among the main 11 S&P sectors, leaders were healthcare and energy. Consumer discretionary and financials were under pressure. And leaders to the upside in the Dow, Merck, J&J, and Amgen, while American Express fell 3.3% and led to the downside. After earnings, FactSet fell 7.8%. And in other news, Credit Suisse denied earlier reports it's exiting the U.S. market. Homebuilder Lennar said the cancellation rate was slightly above the historical average, and mortgage rates in the U.S. jumped to 6.29%. That's the highest since October of 2008. Wrapping things up, Costco and FedEx report after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg-type squawk, SQUAWK, on your terminal, I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really appreciate it. Well, if you've been listening over the past week, you've heard about some of the retailers that have just been getting beat up. Remember, just this week, Gap said it's cutting 500 corporate positions. It follows layoffs at Bed Bath & Beyond, Rent the Runway earlier this month, and more. They're dealing with a host of issues, not just changing consumer demand, but also continued supply chain snarls. We thought it would be a good time for us to check back in with someone we know as Shekhar Natarajan, Executive Vice President and Chief Supply Chain Officer at American Eagle. He's with us in our studios once again, from San Francisco, though. Shekhar, good to have you back with us. How are you?
Thank you so much, Tim, and thanks, Kate.
Well, give us an update on where things are with supply chain and with American Eagle Outfitters. As you look around the economy right now and kind of get an idea for how things are going, the health of the consumer against this rising inflationary environment, what are you seeing?
Great. Last year, as you all know, was a year of systemic failure. Like system as a whole, all the supply chain system actually failed to meet the consumer demand. And so I have some good news. The good news is the system has restarted. And I also have some bad news that we have started a system which is still brittle, right? So as uncertainties continue to kind of exasperate in the market, whether it's geopolitical, whether it's consumer choices, whether it's inflation, whether it's basically recessionary pressures that you see, I think we are still very close to another catastrophic failure of the system.
Wow.
And so tell us how then you make the system less brittle. How do you make it more flexible?
Yeah, so before I get to the solution, I think I want to kind of step back and talk about the problem that exists, right? So the problem that all supply chains face today is commerce was actually built to service 1 million retail outlets. And for a company, it was really built to actually service 1,000 stores. And with e-commerce, you're trying to access 130 million households. So supply chains, the way they were designed, was never meant to actually scale to actually meet the consumer demand the way it is actually moving right now. That's number one. The second problem that everyone has is supply chains by very nature is linked, which means the weakest link determines the resilience of the supply chain. Right? So if FedEx goes down or UPS goes down or a carrier goes down or the port shuts down, you're as good as basically that weakest link in the chain, and everything goes down along with it, and the product availability, right? And the third problem that you have is that basically if you continue to replicate and put bandages on the solution, you're going to have an inflationary pressure go forward in the future.
Why does that Why does that contribute to inflation? Why would a Band-Aid contribute to that?
Exactly. So let's take example of like the parcel industry, right? So today the small parcel industry is 20 billion parcels in the United States, right? And suppose you go to 40 billion parcels, and like people can talk about like when would it get there, whether it's 5 years, 6 years. In that case, you would need 8,000 delivery hubs. You would need 7,500 delivery vans. You would need 1 million trucks. You would need 5,500 distribution centers. You would need 823 sortation centers and fulfillment centers. And so you would need $1.6 trillion in investment, and you would need 15 million people working. The last I know, US is actually growing at 300,000 people a year. So you don't have people to do the job. So you're competing on very scarce resources, be it like knowledge workers and people working in the warehouses. And you're seeing like oil prices go up. You're seeing that basically industrial real estate go up. You're seeing that utilities going up. Everything is going up at the same time. And so to service the market where the market is moving, supply chains were never built to actually perform at scale.
So what is the right way to build a supply chain to perform at scale? How do you do this without contributing further to inflation?
You unchain the supply chain, right? So today, like think internet. When internet was created, like it is a decentralized processing of information, and packets of information is moving. So when something goes down, a router goes down, it is able to automatically like go into another network. So that any-to-any connection is actually missing in the supply chain today, right? So everyone has built like linear relationships, one-on-one relationships. So anyone to be able to access any network at any point at will is a missing capability that is out there. So that's number one. So you create this any-to-any connection to be able to tap into everyone's capacity. The second is everyone is actually building a church for the Easter. So our holiday, like, we do 4x the volume. Like this is like Thanksgiving all the way to Christmas. That is supposed to be the pre-processing of our capacity. 48 weeks of the year, we are running at like 65% capacity. So that underutilized capacity could be now used by someone else, and you could convert the cost center into a profit center.
Okay, we're going to talk a little bit more about how to do this on the other side. We're going to take a little break. We're going to do some news, and then we're going to be right back. We're speaking with Shekhar Natarajan, Executive Vice President and Chief Supply Chain Officer at American Eagle. He's with us right now in the Bloomberg Interactive Broker Studio. It is Bloomberg Business Week on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenivek and Katie Greifeld in for Carol Master this afternoon. In just a few minutes, we're going to get back to our conversation with Shekhar Natarajan, Executive Vice President and Chief Supply Chain Officer at American Eagle. First, though, Charlie Pellet, we got less than a half hour to go. Give us an update on today's trade.
And here's what's going on. It is a volatile day. What a day in terms of the swings between gains and losses, at least for the Dow. Up now by 28 points, higher by about 0.1%. We've got some fast-moving markets here, Tim. S&P down 14, drop of 0.4%. NASDAQ down 99, drop there of 0.9%. Beyond volatility, another key takeaway, we are off session lows. The 2-year yield right now, 4.10%. The 10-year yield, 3.69%. Again, stocks are trading mixed. FedEx says it expects to save as much as $2.7 billion this fiscal year through wide-ranging cost-cutting measures in response to weakening business conditions. That in a filing. Anastasia Amoroso is Chief Investment Strategist at iCapital. She was interviewed this morning on Bloomberg Television and Radio.
If you look at the economy, it's already on the brink. It's already sort of teetering on this break-even level if you look at things like PMIs and new orders, for example. But we may very well see in the next few months, just given the amount of tightening in the economy, we may start to see more layoffs. We may start to see the initial jobless claims goes up. And I think once you start to see that, that's when the markets will finally start to price in greater recession probabilities.
And again, we do have the 2-year yielding 4.10. FedEx shares, by the way, they are trading higher on a down day, a mixed day for the rest of the market. FedEx up by 1.7%. Again, FedEx saying it expects to save up to $2.7 billion as a result of cost-cutting steps. Credit Suisse Group is denying it is exiting the U.S. market following a Reuters report that the Swiss bank was mulling such a withdrawal for its investment bank. Spot gold down 81 cents, little change, down less than 0.1%, $16.73 the ounce. West Texas Intermediate crude up 0.7, $83.54 a barrel. Recapping, the Dow up 0.1%, S&P down 0.3, NASDAQ down 0.8. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, let's get right back to Shekhar Natarajan, Executive Vice President and Chief Supply Chain Officer at American Eagle. He's with us in the Bloomberg Interactive Brokers studio. Shekhar, okay, so went to the break. You were explaining how you have to just completely break the supply chain in order to fix it. I understand you compared it to the decentralized model of something online, and I get that because there's servers and there's redundancy. But we're talking about things. You were talking about shirts and jeans and more at American Eagle. How do you break it, but then you're still able to actually fulfill orders?
Yeah. So when I say like you want to unchain the supply chain, it's not necessarily breaking the supply chain. It is basically linking them very differently. It's linking them very differently. So let me give you a practical example. Like, so Walmart does 50 billion units a year. American Eagle does like 200 million units a year. So what Walmart does in a day and a half is what American Eagle does in a year.
Wow.
Right? And much worse, wild. Amazon does it in half a day. So like there's no scale in the system. So you cannot do it alone. By creating connections where you could do it with others is going to get you the competitive advantage in the scale in the system. That's number one. That's how you do it. The second one is everyone has capacity. It is just like how you match the capacity to where the demand is. And so creating that any-to-any connections helps you to access anyone's network at a very low cost. It's almost a democratized version of like the Uber. Like, you know, what Uber disrupted like with the taxi industry is what you could do with the supply chain industry. The third thing, which is actually a missing link here because of the interoperability you create, suppose basically like Tim ends up buying like 5 packages. Tim gets 5 packages because there are 5 copper lines from 5 different companies to his doorstep. Because you've created an interoperable network, I could take all the packages which are headed to Tim's house and put it into one box, route it very intelligently for him to have one experience that he controls. Right? So all of the cumulative of all of these are going to actually not only buck the trend on the cost of doing business, because these are all like cheaper ways of doing the business, but it fundamentally converts the commerce into more of a regenerative business.
Right. So in sort of, creating accessing other people's networks, I mean, how sort of willing have other retailers of your size been to agree to do that?
We started with the hypothesis that, all change is going to be a bell curve, right? And basically, we found that to be true. So there are some very early adopters that we've been working with who are very, very excited to do business with us. And some of them have come to us and said, hey, we would love for you to run the supply chain for us. On the spectrum of end-to-end sharing, we'd love to share everything with you. Let's kind of do business together. And then there are customers who are saying, on the spectrum of end-to-end services, we would like to test with you a handful of capabilities. That way it lowers my cost and it lowers my infrastructure investment needed in the back end. And then on the laggard side, people who are really reluctant about change, we are actually launching something really exciting next year where you don't have to give up you don't have to give up your control. You could participate in an open market.
How is the pressure on you right now to succeed at something like this? American Eagle stock is underperforming its peers this year. It's not immune to the challenges of the macroeconomic environment, but it's been a tough few months for the company. Shares are down about 60% this year.
Yeah. So listen, Jay Schottenstein, who's our CEO, is a visionary CEO. He's seen the trends even before things happen. Let's take Aerie as an example, right? When basically people were retouching models, Jay and Jen Foyle, our merchant, a global merchant, had the audacity to do something very different, go against the grain.
Yeah.
Right? Which was really to basically have body positivity as a movement. And now everyone is following suit. Right? So we believe in the long run. We believe in the long-term play. We actually, we think this is going to be equally as big or even a bigger idea than the parent company itself. And so I think, we are very bullish about it. We are building a tech platform, right? We are building interoperability. We are actually doing what is sustainable for the business now and into the future. And we are empowering everyone like us to be also competitive.
Shekhar Natarajan, Executive Vice President, also Chief Supply Chain Officer at American Eagle. He joins us live from the Bloomberg Interactive Brokers studio. A big thank you for coming in and joining us once again, Shekhar. Always great to have you join us. Quick update of the markets as we get less than 20 minutes away from the close here. The Dow is still in positive, green, 0.1%. The S&P 500 down 0.3%, and we are off our lows in the NASDAQ as well, down 0.8%. Let's go to Washington, D.C. for world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. America's top diplomat says Russia's President Vladimir Putin started the war in Ukraine and he alone can end it. During a speech before the UN Security Council, Antony Blinken urged other nations to speak out.
The very international order that we have gathered here to uphold is being shredded before our eyes. We cannot, we will not allow President Putin to get away with it.
Blinken says Putin cannot be trusted, especially after he hinted at using nuclear weapons. A victory for federal prosecutors in the case of the documents taken from Donald Trump's Florida estate. A federal appeals court says the Justice Department can use about 100 documents with classified markings in their criminal investigation. Bloomberg Government's Jack Fitzpatrick explains the significance of that ruling.
They were, before this ruling, supposed to wait for the special master to finish his review of the 11,000 documents that they seized. But instead, they're now being told they don't have to wait on that review in order to use the about 100 classified documents in their investigation.
Bloomberg Government's Jack Fitzpatrick. Senators are putting a focus on scams against the elderly. During today's hearing, South Carolina Republican Tim Scott said scammers are creative and ruthless, preying on the nation's most vulnerable populations.
On average, seniors lose about $34,200 for every instance of a scam or fraud.
Again, Senator Tim Scott. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
Thank you so much for that update, Nancy Lyons, Tim Stanovic, and Katie Greifeld in for Carol Masser this afternoon. And tomorrow, Katie, we got a special Friday show, too.
Friday fun. Freaky Friday.
Freaky Friday. I don't have a good transition to talk about housing market paralysis.
Can you try?
Yeah, no, I'm not even going to try. John Gittleson and Prashant Gopal are out with a new story among the most read on the Bloomberg terminal. It's about soaring mortgage rates, leading to the worst affordability in almost 4 decades. At the same time, sellers are trapped in place. Nobody wants to do anything, and it's a supply issue, so prices aren't coming down as much as they should.
I love the opening of their story. They write that the U.S. housing market has gone from fear of missing out to just plain fear. So it was a pretty abrupt end to the pandemic housing boom. Of course, it was driven by that pesky Federal Reserve and its historically aggressive rate hikes. It's leading to a sense of paralysis in the market, which is, of course, a sign that prices will decline, and that'll accelerate once we exit this period of paralysis. For those keeping track at home, mortgage borrowing costs are at the highest level since 2008.
Well, that's the issue here, Katie. So even though prices are falling from peak levels, it's not necessarily an opportunity for first-time home buyers who've been waiting on the sidelines to get in because of what you just talked about, the mortgage market, or the mortgage, a 30-year fixed above 6% right now, which just means that your monthly payment has gone up that much.
It's this really interesting dynamic where both the buyers and the sellers are basically trapped in place. You have listings lingering longer because, of course, demand has just collapsed and less supply, though, is coming into the market. There was a report from Zillow this week that showed that new listings have slid almost 23% in August from a year earlier.
Yeah, that's because homeowners who don't have to move don't want to trade cheap rates for higher ones, keeping inventories relatively low. So what does it all mean? It means that transactions are just tumbling. Sales of previously owned homes fell for a 7th straight month in August. That's according to the National Association of Realtors. We got that data yesterday. It's the lowest level since the depths of the pandemic in May of 2020. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 13 minutes to go ahead of the closing bell, looking at a mixed market, volatile day. The Dow now up 103 points, up by 0.4%. S&P little change, down by 1 point right now. We have got NASDAQ down 50, a drop there of 0.5%. What a reversal, by the way, for the S&P 500. Activist investor Jana Partners has taken a nearly 10% stake in Freshpet and plans to push the pet food company to make changes to boost its stock price and explore a sale. This according to Dow Jones. Freshpet, FRPT on the ticker, surging now by 21.8%. FedEx early earnings release there. They are now blaming it on a technical issue. It says it was unintentional. FedEx also says it expects to save as much as $2.7 billion this fiscal year through wide-ranging cost-cutting measures. FedEx delivering a gain right now of 1.5%. Again, recapping the markets, we have got the Dow up 110, now up by 0.4%. S&P little change, down 0.1. NASDAQ down 0.5%. Volatility gripping stocks. 2-year yield 4.10%. The 10-year yield 3.69%. Spot gold virtually flat on the day, down less than 0.1%. 16.72 the ounce. West Texas Intermediate crude up 0.7%. 83.51 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really appreciate it. It is 3:49 on a Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg Editorial Board. A proposal by the Group of Seven to impose a price cap on purchases of Russian oil is so neat that some have derided it as an academic parlor game. Can the world's wealthiest countries really reduce Moscow's revenue, which is fueling the war in Ukraine, while keeping crude flowing into global markets? As it happens, the answer is probably yes. The plan has plenty of flaws, but it's the world's least bad option for curtailing Russian President Vladimir Putin's ability to wield energy as a weapon. As the war drags on and global economies cool, Russia's bargaining power is only diminishing. Any steps that will hasten that process are worth pursuing. This editorial was written by the Bloomberg Editorial Board. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPIN go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, it is the Drive to the Close. We got less than 10 minutes to go in the equity trade today. Very pleased to have with us Ryan Dietrich, Chief Market Strategist at the Carson Group, joining us on the phone this afternoon from Charlotte, North Carolina. You can follow him on Twitter at Ryan Dietrich. Ryan, how are you?
Tim, I'm doing well. Looks like we've got a little bit of a bounce late today, so that's a good thing, I guess.
Yeah, a little bit. But I'm wondering how you're looking at at a market like this, because as a technical analyst, you've got a lot of history to look at about when the Fed has raised rates, what's happening politically, because we're in a midterm year. What are the key indicators that you're looking at?
Yeah, there's a lot of things we can talk about. I think the key thing I want to point out is on June 16th, when we had the lows for the year, and I know we're not too far away from them as we are right now, there are over 1,000 stocks on the NYSE that made a new 52-week low. Just yesterday, we had less than 400 stocks making a 52-week low. What in the world does that mean? Well, there's not as many stocks making a new low. So that's a minor, or pretty significant, in our opinion, actually technical positive thing, right? Remember back in October 2008, all these stocks made new lows. And in March, the indices made new lows, but not as many stocks did. It's an underlying positive sign that there's a little strength under the surface. And that's just one thing that we're looking at that, believe me, this has been an ugly run, no question. But the good news, when we get into it, seasonality is going to be a tailwind going forward, whereas it was a headwind most of this year so far.
And Ryan, focusing on the event that we had yesterday, the third straight 75 basis point hike from the Federal Reserve. I spent a lot of time on Twitter, and actually a tweet of yours inspired a story that I wrote last night. You tweeted about the S&P 500's typical reaction after Fed rate hikes this cycle. Every single rate hike, the S&P 500 had managed to finish in the green. That didn't happen yesterday. And putting that together with some of the technical indicators that you mentioned, what does that tell you? Is that a positive sign?
Well, first of all, thanks for reading my tweet. That's great. But you think about it, yes. I mean, we've had positive reactions initially on a Fed hike this year. Then we've seen some huge pukes, honestly, earlier this year, all on the second days, like people had time to think about it.
Is that a technical term?
I think I'm gonna trademark that.
Okay.
I think, yeah, it could be. But but that's what's happened. But now, we had the sell off yesterday. We're probably going to finish in the red today. So this would be the day of the hike red, the next day red. You got to go back to December of 2018, the last time we had a hike, and then weakness the day of and the next day. So it's been a while, but I think we'll put it like this. I mean, everyone is just scratching their head at what's going on with the Fed, and boy, can they really be more hawkish? And then they are more hawkish, right? But I'll tell you, just look at the calendar. I mean, September, we wrote about this, talked about it here at the Carson Group on the investment team. September is the worst month of the year. But when you're weak heading into it, like down 15% for the year like we were this year, Septembers are really, really rough and can be dicey. So sure, the Fed matters. We're not ignoring that. But the stage was set, honestly, for some potential weakness. And then once you get through the midterm election, that is when you start to see more of a positive seasonal. And it's just amazing how we think history is playing out again. Weak the first 9 months of the year, and then potentially a pretty good rally the rest of this year could be in store here.
Well, for better or for worse, the month is almost over. So if Q4, yeah, I know, Q4 could be, you're saying could be a good one. So are the lows for the year end, were they in on June 17th?
We think they were. Now, again, we're awfully close. I'm fully aware, but let's put it this way.
3% away.
More stocks likely made new lows in the middle of June, which it's a stock market or a market of stocks, right? And that's a potential positive that more stocks made new lows probably back in June that are going to make in the month of September here. So that's a positive. Also, let's real quickly on midterm years. If you look back to World War II. Right, the S&P 500 from the day of the midterm election, whenever that is, that first Tuesday of the month in November, a year later, stocks have never been lower, up over 14% on average. So again, it's just another bullet point for someone who's really worried about what's happened this year, rightfully so, with stocks and bonds both doing quite poorly. History would say there are a lot more tailwinds once we can get through this election and into kind of that third year of the presidential cycle, which historically does really well under a new president.
Well, just to put on my doom and gloom hat, I mean, just weighing what we got from Jerome Powell yesterday, he didn't say recession, but he got pretty close. And it feels like the Fed from Powell down has made pretty clear that they're not going to stop until they break something. And it seems like the something that they're trying to break right now is just how hot the labor market is. And when you weigh, again, the technicals against the macro backdrop, it's how do you come out positive?
Yeah, it's tough. I mean, there's good arguments on both sides. But let's put it like this. You mentioned the Fed there. And you look at the last 8 cycles, guys, the Fed kept hiking until the Fed's fund rate was above the CPI, the headline CPI. Last I looked, that's up over 8.3%. So we got a ways to go, although inflation's probably going to start coming back down, we think. But still, they could be hiking. But I'll just put it like this. When everyone's thinking like somebody isn't thinking, that's what General Patton said. I like to use that. And just this morning, I'm sure you guys probably talked about it earlier. I didn't get a chance to listen. That AAII sentiment poll, over 60% bears. Only the 5th time in history. You're talking like March 2009, the last time we saw that, October 2008 before that. Very, very rare to see this many people bearish. Again, at the same time, stocks and bonds have had a really terrible year, so that's why people are bearish. But when everyone's thinking alike, there could be an opportunity. And I know all the worries. We get all the macro worries that are out there. But when expectations are this low, like they are right now, just looking at that sentiment poll and other polls that are out there, and flows and different things, there really could be a move to the upside that could surprise a lot of people.
Okay. How much of a move to the upside are we talking about?
Yeah, well, I don't think we're going to get positive. Let's put it that way for the year, right? S&P is down 14% for the year. But listen, potentially a double-digit return in the fourth quarter could be very possible. We've seen that historically. 1962 and this year look a lot alike. There's some similarities. 62 bottomed in the middle of October and then saw a 19% rally off those October lows before the end of the year. And that was another midterm year that was really weak, that had a late bottom in the year. In 1982, another midterm year that started off really poorly, like this year has, saw a really big rally in the fourth quarter. So again, do we come back to positive? Probably not on the S&P, but again, well off the lows where we are now, maybe double digits from where we are right now is quite likely.
Ryan Dietrich, Chief Market Strategist at the Carson Group, joining us this afternoon on the phone from Charlotte, North Carolina. Seeing a little bit of a bounce here late in this session as we do get just a couple of minutes away from the trade, though the NASDAQ is down once again more than 1%. The S&P 500 down a little more than 0.6%. The Dow Jones down a little more than 0.1%. Coming up next, it's our Beyond the Bell countdown to the close. We do that with our Bloomberg TV team across radio, YouTube, and Bloomberg TV.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to the closing bell, here to help take us beyond the bell. It's our global simulcast, joined right now by Tim Stenovic and Katie Greifeld. We welcome our audiences across Bloomberg Television and radio, as well as on YouTube, to parse what has been a really wild day, a volatile day here, with stocks deep into the red here, and of course, well, bonds also deep into the red, pushing yields higher.
We just spoke with Ryan Dietrich over at the Carson Group. He's a technical analyst, and he's always a really optimistic guy. He's looking at the glass half full right now. He says we've got seasonality on our side for the fourth quarter of the year, and the midterms as well on our side for a year after midterm elections. Okay, this is what Ryan Dietrich told me. I don't know how to read into this.
Yeah.
But from the day of midterms,
yeah,
a year later, stocks have never been lower.
I've seen this stat before, and I mean, it's been well telegraphed. History repeats itself sometimes, but
he said that to us. History's repeating itself right now.
I thought it was supposed to rhyme, not repeat.
Well, we haven't gotten there yet, so maybe it doesn't rhyme. Maybe it's going to be like one of those really bad battle rappers who never sort of matches up.
Oh boy, we are so off track. I love it. I love this show.
I think we're on track.
Yeah, I want to talk
We're
about
on a
track all day.
I'm going to get
Thank
us
you,
back
Katie.
on track.
Now, Katie's the optimist. Look at that half glass full kind of person.
Sorry, Katie was dropping Drake lines from 2010 earlier today on her Twitter.
Yeah, what did you say earlier, Katie?
Drake just stands for do right and kill everything. He said that in 2010, which was 12 years ago.
Your mantra, right?
He's done pretty well.
I think about it every morning.
Do you really? You just write that on your bathroom mirror.
Big time.
What are you killing? It's a bit unnerving.
All right, in all seriousness, folks, interesting day here in the markets. It could have been a lot worse here. Stocks are off the lows of the day, but still going to finish in the red, with the Dow Jones Industrial Average down roughly about 118, 119 points, or about 0.4%. Now, take a look at the S&P 500, down 32 points, or about 0.9%. It's going to close right around 37.57. The low of the day was 37.49 here, so not far off the lows of the day. The NASDAQ Composite down about 1.4%. But the real decliner here on the day, it was lower out of the gate, and it stayed lower pretty much through the session. The Russell 2000 down more than 2% here at the close, down about 39 points.
Yeah, pretty broad-based in the S&P 500 on an individual stock basis. We only saw 90 stocks move higher in the S&P 500. 412 moved lower.
Take a look at where we are, Tim, on a sector level as well. There's only about 4 sectors in the green today, 2 sectors below sort of the headline indice. Pharma, as we've talked a lot about, the healthcare sector today being a big outperformer. Household products, of course, and media and telecom, but really not a lot to write home about. Everything else is in the red. Take a look at some of the worst performers. Katie, I'll do this for you. It's banks, it's dividend financials, and then you're also getting some semiconductors in there, as well as some of the auto components. So sort of that classic long duration assets, the risk on trade, all of that a little bit unwinding today.
It's interesting. Banks have actually underperformed tech since the Fed started hiking. Not what you would have thought, but in any case, to get the gainers, Eli Lilly popping today, up almost 5%. That's after UBS upgraded the stock to buy from neutral. They had a pretty glowing report. They said that this is the, quote, most attractive name across large cap pharma coverage. They said that one of Eli Lilly's drugs that led to weight loss in a clinical trial could be the biggest drug ever. The biggest drug, not just Eli Lilly's biggest drug. Yeah, glowing. Valero Energy also rising today, bucking the trend that we saw in the energy sector, which was down today. You had an upgrade there. I believe it was from JP Morgan, raising their price target to $151 from $148. They maintained their overweight rating as well. And then you look at Activision Blizzard. Microsoft CEO said in a Bloomberg television interview that he's confident the company can gain regulatory approval for its $69 billion purchase of the company. That's even with UK regulators giving it a pretty close look.
I'm just going to add two quickly to your board here. We were talking about this before the bells. Kano Health actually did a rally pretty hard into the close, up about 32% on the back of M&A speculation. Freshpet was also higher by about 16% on the back of a 10% stake revealed by JANA Partners, and Cassava Sciences up about 36% here on the day after being cleared after that Justice Department investigation.
All right, some other movers on the upside. Let's get some decliners on the board here. NVIDIA, chip stocks, are really under pressure today. If you actually look at the stocks over the last 2 years, we're right now at the lows that we were at in November of 2020. So that's where the stocks is trading right now. NVIDIA, one of the companies dragging it lower, actually hitting a 52-week low today. Rising fears of a recession, surging yields, a bad combination for chip stocks. And then Darden Restaurants finishing the day down by more than 4.4%. It's the parent company of Olive Garden, Capital Grille, Bahama Breeze, and more. And in fact, it was Olive Garden that's got investors concerned. The company reported weaker than expected comp sales at Olive Garden, and then also came up short when it came to restaurant level margins.
I was really fascinated by this, and they actually talked a little bit about how some of the lower end consumers aren't necessarily dining out with the same frequency, which I thought was interesting as well, something to keep an eye on.
And then Digital World Acquisition Corporation, the SPAC tied to former President Trump, down another 5.4% today. It's fallen every day for the past 7 days.
You guys are still hitting that. Pop quiz, Tim. How many 52-week lows right now across the tape?
About today. Today, Romaine?
Today, yeah.
Okay.
No.
Yesterday.
I would say this month about 400.
Okay, well, today it's 244.
Okay, not bad. Ryan Dietrich told us 400 this month.
Okay.
Yeah.
You like that guy.
He's
I like
great.
him too, yeah.
Yeah, just got a new job.
Okay.
Yeah.
Thank you.
Can I lure you over to some commodities? Maybe some FX? Flirting away the pair of you. Meanwhile, I'm looking at what's happening in terms of the Japanese yen. Really, I think the news of the day for all of us was the continued narrative and global central banks and also finance ministers weighing in to try and support their beleaguered FX, their currencies under duress because of a hawkish Federal Reserve. So the Japanese yen has been under so much pressure. Rallies were strengthening up more than a percentage point after we get that intervention, the first intervention that we've seen in decades. We're seeing, though, a Swiss franc that I'm afraid did not like the fact that the Swiss National Bank has managed to hike itself out of negativity. We're still lower, weakening versus the US dollar, and really that was because they didn't go far enough. I'm afraid 75 basis points is a new move in town. Bank of England only moved by 0.5%, and it was weaker, of course, against the US dollar overall as well. Canadian dollar loonie was weaker, even though we did see a bit of a overall rally in oil markets. That was despite some of the worries about global economy. Oil market did get bid up a little bit on the day. Natural gas is falling by some 7%. Steel actually a little bit higher, some of the metals getting a bid. And overall, it was a case of Japan once again intervening in the market. Interesting that we saw the Japanese bonds get a bid overall. Swiss bonds, significant bid after we saw the Swiss National Bank basically not do as much as the market anticipated.
It was such a day, Caroline, of global currencies, global central banks, global bond yields. I think it's a historic day, and I'm going to take just 2 seconds to pause about this, Caroline. As you were talking about sort of the end of zero interest rate policy, we'll take the BOJ out of that, but that big experiment, and it was a global experiment, at least if you were in Europe, is behind us. So we put that behind us, we move forward, and we move forward quickly as we think about rate of change and 7 basis points now. Again, a relentless 11-day streak on rising 2-year yields, the biggest streak that we've had since the Volcker era. What that means about a 4.11, and of course now on a 10-year, Romaine, a 3.70 that is at 17 basis points on the day.
And we were talking with someone a little bit earlier about short duration and how this has kind of become a crowded trade. I think it's interesting to see some of the sell-off now hit the longer end of the curve here, as maybe people are pricing in those recession probabilities at a rate that maybe we weren't doing before.
Hey, I want to talk about some of the companies that we're hearing more and more from. And you guys covered this on Bloomberg TV. We're going to be speaking to Lee Glasgow in just a second from Bloomberg Intelligence about the FedEx earnings that crossed a little earlier.
Oops, sticky fingers.
Mm-hmm.
Yeah, 2:30 versus 4 o'clock.
You know, one time I spilled coffee on my keyboard,
Yeah?
For some reason, the E didn't work. So every time I typed out emails, it was all this just gibberish. Maybe that's what happened.
Well, in all seriousness,
You know they can get you new keyboards.
Oh, do you?
There's a ticket
Look
for
at you,
that.
fancy.
I'm trying to keep us.
Hopefully they're watching.
I'm trying to keep us on track here.
Well done,
We,
Tim.
we
We're
did
on
see
a
shares
track.
move
Katie
higher. The company talked about
Katie Greifeld's my new paramount.
ways that
I like it.
the company will save costs in 2023, including actually closing some sort operations on Sundays. And I'm wondering how this changes the macroeconomic picture if we do indeed, Caroline, look at FedEx as sort of a bellwether here.
Well, I mean, Remain, amid his rap battling, was signaling out what was in some of that earnings report that did come, or the 8K that came too early. And it did show that overall, broader, what was it, the package market depleting by 11% overall Remain. This is like headwinds across an entire industry group that idiosyncratically FedEx is having an issue about.
Well, that was 11% for FedEx, but we talked to Lee Glasgow as well. He seems to think this is more contained to FedEx than rather something broader. I don't know if I necessarily buy that, but he said that, and we've heard other analysts also make that case. I thought it was interesting, too. FedEx actually said they're going to raise prices, too, at the beginning of the year. I think roughly like 6.9%. So it'll be interesting to see how much pricing power they have, particularly if we are actually headed into a recession.
You bring up a good point, though, Tim. How much of this is execution risk on a single company versus some of those broader macro headwinds that all companies are experiencing? And again, with some of the pre-earnings, pre-announcements, and starting to get into earnings season, we're going to hear a lot more from these companies if they can or cannot make those full-year numbers.
Yeah, hard to believe the quarter wraps up next week, and then we're going to start to hear from companies in just a couple of weeks. That's going to do it for hearing from us this afternoon. Our cross-platform coverage of the market close right here on Bloomberg TV, on radio, and on YouTube. We are going to be back here, though, tomorrow, same time, same place.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Tim Stenovic and Katie Greifeld in for Carol Masser this afternoon. Katie, I know you were itching to get in on that simulcast. What did we leave out?
It was honestly so fun. That was a
It
great
was a fun one.
simulcast. It is interesting to just meditate on the early FedEx earnings.
Yeah.
FedEx only finished up 0.8%. It had been up, I think, around 5% after that news broke, but gave back a lot of those gains. Stock is still down over 40% for the year.
Well, fortunately, we're going to be speaking with Lee Glasgow in just a few minutes. He covers FedEx for Bloomberg Intelligence, so stay tuned for that. Let's get over to world and national news, though. Nancy Lyons right now is in Washington, D.C. Hey, Nance.
Thanks so much, Tim. U.S. Secretary of State Antony Blinken is urging the world to hold Russian President Vladimir Putin accountable for the Ukraine invasion.
One man chose this war. One man can end it. Because if Russia stops fighting, the war ends. If Ukraine stops fighting, Ukraine ends.
During his speech before the UN General Assembly, Blinken warned the international order the UN is supposed to uphold is being shredded before our eyes. Blinken says we cannot and we will not let President Putin get away with it. Russians are now beginning to show their anger at Putin for mobilizing 300,000 more troops for the invasion. Hundreds have been protesting in the streets. The National Security Council's John Kirby says Putin is feeling the pressure.
It's become much harder for him to keep the truth from the Russian people. Mobilization was something that we know he wasn't looking forward to having to do because there's no way to hide it anymore, that they are struggling and that they need additional manpower.
Kirby says Russian families will be seeing a bigger impact from Putin's actions. The battle over abortion is playing out today in Indiana. A judge there has blocked the state's abortion ban from being enforced, putting the new law on hold as abortion clinic operators argue that it violates the state constitution. The judge wrote, quote, "There is reasonable likelihood this significant restriction of personal autonomy offends the liberty guarantees of the Indiana Constitution." Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Thank you so much for that update, Nancy Lyons. Tim Stenovic and Katie Greifeld alive in the Bloomberg Interactive Broker Studio. Katie in for Carol this afternoon and tomorrow afternoon as well. Katie, a story here in New York City at the top of the most read on the Bloomberg terminal by Ella Saran and Emma Court is about New York City homeless shelters overflowing. And New York City is going to put up tents for migrants. The city is establishing new triage centers and tents to handle the recent influx of migrants who are adding to already crowded shelters that have been strained for months. And I mean, shelters for migrants, not for homeless.
And Mayor Eric Adams said the city would open 2 new, what are called humanitarian emergency response and relief centers, of course, to house those asylum seekers who can't find other places to stay for approximately 24 to 96 hours. That is according to a Thursday announcement. People might stay longer depending on the situation.
Yeah, we're talking about overcrowding in the city shelters. New York had initially set up temporary shelters in hotels and other buildings to house thousands of migrants, many of whom were bused to the East Coast in recent weeks by the Republican governors of Texas and Arizona. But the mayor says he expects many more thousands of migrants to arrive each week, and the city, he said, could reach a breaking point.
And in anticipation of the surge, the city distributed photos of what some of the tents could look like. They look like massive white tents with dozens of orange cots that represented past humanitarian aid centers, and a city spokesperson confirmed single adults would be housed in the tents while families would be placed in a different setup, though the spokesperson did not elaborate on what the structures for families would look like.
In a joint statement, advocacy groups led by Legal Aid and Coalition for the Homeless say that they were, quote, deeply concerned with any scenario in which families with children would be relegated to congregate settings. The organizations warn that such setups can be dangerous for families and is, quote, already subject to legal prohibitions.
The groups also said that they're still looking to work with the city's officials to establish what they called a viable solution that satisfies New York's legal and moral obligation.
Check out this story and more reporting available on the Bloomberg terminal and at Bloomberg.com. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with the developing story headline from the Bloomberg Professional Service. Boeing poised to settle an SEC probe relating to the 737 MAX. This according to the Wall Street Journal. We got earnings coming across right now from Costco. It's reporting earnings per share for the fourth quarter that did beat the average analyst estimate. After ours, Costco shares, they are trading little changed. FedEx, we had an early release of that after the bell earnings report. That's what it was scheduled for mid-afternoon, though. All of a sudden, we saw some headlines on the Bloomberg involving FedEx. FedEx saying it expects to save as much as $2.7 billion this fiscal year through wide-ranging cost-cutting measures in response to weakening business conditions. Now, on a down day for the rest of the market, we did see FedEx shares initially jump. They ended the session with a gain of about 0.8%. The Dow, the S&P, and NASDAQ all ended lower in a volatile session today. Treasury yields hit multi-year highs. The 2-year, 4.11%. The 10-year, 3.70% right now. The Dow, the S&P, and NASDAQ all ended a volatile day in the red. S&P down 32, a drop there of 0.8. The Dow today down 107, down 0.4%. NASDAQ down 153, a drop there of 1.4%. Spot gold down 0.1%, 1671 the ounce. West Texas Intermediate crude up 0.6%, 83.47 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thank you so much for that update, Charlie Pellet. Really appreciate it. Well, as of 2:30 at Wall Street time today, we got a peek into FedEx's latest quarter and how it's thinking about the remainder of the year in 2023 as well. Those numbers actually came just about an hour and a half early. About an hour later, FedEx said that it was a technical error that led to these numbers coming out. Needless to say, it does give our next guest plenty of time to pour over those numbers and tell us more about the FedEx story. We're very pleased this afternoon to have Lee Glasgow with us, Senior Transport Logistics and Shipping Analyst for Bloomberg Intelligence. He joins us on the phone from New Jersey. So, Lee, we did see FedEx shares move higher when these numbers crossed. They did end up closing in the green today. The big headline here is that the company expects to save as much as $2.7 billion the fiscal year through wide-ranging cost-cutting measures in response to weakening business conditions. What were your takeaways?
Yeah, so, I think the devil's in the details with this. The amount that they outlined for 2023 is $2.2 to $2.7 billion, which is up to $8.10 a share in cost savings. And then they also outlined some longer-term targets for 2025 of about $4 billion. And we still believe that there's a lot of execution risks that will hang over management's head until they prove the naysayers wrong. They can turn around what is probably really extreme low sentiment on the stock. I mean, shares are down around 40% year to date versus 21% off for UPS. So the company has there's a lot of the sentiment is really low, for the company right now. And management really needs to execute on this plan. It's great that they have a plan now. I think a lot of people will be asking, where's all these cost savings coming from? Why weren't they doing this before? But, like I said, they're having an earnings call in about an hour, and we'll probably get more details after that.
Okay.
Well, Lee, to that point, that it's great that they have a plan. How confident are you that they will actually be able to execute on this?
Yeah, like I mentioned earlier, there's a lot of execution risk with FedEx. They've kind of overpromised and underdelivered over the years, and that's why the stock has underperformed. They have a great opportunity to do better in Europe. They bought TNT, which is a European parcel carrier, back in 2016, and that acquisition has not panned out. Some of the things were beyond their control, like a pandemic and a major cyber attack that impacted that business. But at the end of the day, they really haven't. That acquisition really hasn't been paying dividends. We were pretty optimistic that we'd start seeing some benefits, and we're quite disappointed, when management or the company pre-announced last week saying that they were having issues in Europe, which to us means that the TNT integration is not going that well. And it's just interesting because, UPS and Deutsche Post are not saying that they're seeing the kind of weakness in Europe and globally that FedEx is seeing. FedEx does have probably an outsized exposure to Asia, and the China lockdowns have not been a friend for the company.
Hey, Lee, is this still to you a company-specific story? Are the woes that FedEx is facing in Asia, in Europe, and here in the United States as well, is that specific to FedEx still? I know it's something that you said last week, but as you've been able to dig into the numbers, and I know we got the earnings call later this afternoon, is that still a thesis you're sticking to?
Yeah, I think predominantly it's mostly company specific. Obviously, the economy, the global economy is moderating, and that's going to impact everybody. It's good to see that the company announced some rate increases of 6.9% at Ground and Express. That's a little higher than some historical averages. So it looks like they're looking to mitigate the inflationary pressures that everyone else is dealing with. But I mean, just to answer your question bluntly, I think it's more or less a FedEx story. I think the new management team there has a lot of opportunity to cut some of the fat or improve the overall operations of the company, because FedEx's network is very interesting because they operate two separate networks. They operate an express network, and then they operate a ground network, and a lot of the ground delivery people are independent contractors. They're companies that are independent contractors versus UPS, which are employees in one network.
Yeah, Lee, I mean, I noticed this when you walk by a when you walk by a FedEx truck and it says that it's, operated by a local place, in Staten Island or something, at least here around New York City. Does UPS have an advantage there?
I think UPS has, it's interesting because UPS is a Teamster organization, and, people might, be concerned about, operating as a union business. But at the end of the day, my guess is that UPS has an easier time attracting and retaining employees. We're in this tight labor market. That's definitely a competitive advantage. And also, they have their own people. They can control their own destiny versus relying on independent contractors that are each running independent businesses, trying to make sure they have, the right equipment, safe drivers, and not only safe drivers, but actually somebody driving. Because right now, that's a hard person to come by because there's a tight labor market.
It's so, it's so interesting to be talking about, the economy sort of eroding, but at the same time, the labor market just continuing to be so strong. Lee Glasgow, Senior Transport, Logistics, and Shipping Analyst for Bloomberg Intelligence. He's got a busy afternoon ahead of him with the FedEx earnings call. Big thank you for joining us right here on a Bloomberg Business Week. Katie Greifeld and Tim Stenovec, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It's Bloomberg Business Week. Tim Stenevec and Katie Greifeld. We're live in the Bloomberg Interactive Brokers Studio in New York. In just a few minutes, we're going to be chatting with the CEO of Connect One Bank, Frank Sorrentino. He's going to be back with us in just a few.
But before we get there, let's go to Charlie Pellet for an update. What's going on, Charlie?
Well, I thank you very much, Katie Greifeld. Lots going on. We got the numbers out of FedEx, and it was a down day, volatile session, as you've been reporting. Treasury yields, though, hitting multi-year highs. Stocks fell today as a parade of central banks joined the Fed in boosting rates to curb scorching levels of inflation at the expense of economic growth. Today, the S&P down 31, a drop of 0.8%. The Dow down 107, down 0.4%. Again, a volatile day. We had NASDAQ down 153, a drop there of 1.4%. The two-year yield, 4.11%. We've got the 10-year at 3.70%. Treasury yields hitting multi-year highs again. Gold down $2 the ounce, 16.71, drop there of 0.1%. And West Texas Intermediate crude up 0.6%, 83.41 for a barrel of WTI. So a down day, a rough September. Ryan Dietrich is Chief Market Strategist at the Carson Group. And right here on Bloomberg Business Week, he told us you cannot ignore the calendar.
September is the worst month of the year. When you're weak heading into it, like down 15% for the year like we were this year, Septembers are really, really rough and can be dicey. So sure, the Fed matters. We're not ignoring that. But the stage was set, honestly, for some potential weakness.
FedEx expects to save as much as $2.7 billion this fiscal year through wide-ranging cost-cutting measures in response to weakening business conditions. Bloomberg Intelligence Senior Transportation Analyst Lee Klaskow was our guest moments ago right here on Bloomberg Business Week.
There's a lot of execution risks that will hang over management's head until they prove the naysayers wrong and get a turnaround, turn around what is probably really extreme low sentiment on the stock. I mean, shares are down around 40% year-to-date versus 21% off for UPS.
Indeed, though, today was an up day for FedEx, gaining 0.8% after that early release of earnings numbers, which surprised investors. Again, recapping, stocks lower, S&P down 32, drop there of 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, our next guest has a great read on what's happening when it comes to Main Street. Connect One Bank, it's community-based, full-service commercial bank. They've got a couple dozen branches across New Jersey, New York, and a new one in West Palm Beach, Florida. We got the CEO of the company, Frank Sorrentino, joining us right now. He joins us on the phone from New York City. Frank, it's good to talk with you again. How are you?
Good. Great to talk to you as well. Things are pretty well.
That's good to hear because you guys have got a great read on what's happening in the local economy right now. Are you seeing any weakness across real estate, small business, personal accounts? Give us an idea of what you're seeing at that Connect One Bank right now.
You know, from our perspective at Connect One, we're seeing that our clients are probably in the best financial shape they've been maybe in their entire lives or careers. Consumers have, and our clients probably have more liquidity today than they've had in the past. The business is good, business is strong. However, everyone is, thinking very cautiously about what's going on going forward. We see a tale of, two different stories going on. People are still having difficulty hiring. Yet there's a lot of strength in the economy, but people are beginning to worry about, can they afford a house? Will they be able to afford, rent going forward? Can they get the supplies they need to run their businesses effectively today? And I think that's what the Fed is really, mired in as we look here. The data seems to be all over the place.
So it sounds like, again, to that sort of bifurcation you were talking about, people are still in pretty good shape, but there's that fear building. Has that started to translate into how people behave? Have people started to adjust their behavior or what they plan to spend money on in the future?
I think they are. I think they're beginning to think about those things, and I think it's beginning to change behaviors. I think people are willing to wait on certain things. Certainly, we see this with a lot of our construction clients. Connect One has a pretty significant construction portfolio, and we are seeing some projects that are either being put on hold or being pushed off a little bit to see what will happen. The rise in interest rates is definitely impacting some of the metrics in some of those projects. And so I do think it's beginning to change how people think about the future. And what I said before about, people's personal financial statements or businesses' financial statements, it's still a fixed amount of capital. And so if certain costs are going up, whether it be interest costs or the cost of rent or the cost of hiring employees, that's going to take away dollars and cents from other things that they may want to invest in or do. So, in the case of our consumers, if their rent is going up, they're going to have less money to go out and spend on vacation or spend at the restaurant. And so they're thinking about things in very different ways. That being said, we're also hearing from those restaurants and all these other businesses that they're having a pretty good year in 2022.
Yeah, it's interesting because we were talking about this earlier on our simulcast with our friends at BTV. The idea of Olive Garden, parent company Darden, reporting today and saying that there is some weakness in sort of the lower end consumer not going out to eat as much. And I'm wondering if you're starting to see any signs of that, Frank, because what I'm hearing from you is just a lot of optimism, which is great, but it's not necessarily what we're hearing from some of the bigger companies when it comes to changing consumer habits.
Yeah, again, as I said, I think it's beginning to change. I think we are starting to see some of those things beginning to creep into the economy. I believe interest rates are now at a point where people are taking them seriously. Keep in mind, interest rates went from 0 to where they are today, and where they are today is a more normal state. I know, everyone seems to think we're in a high interest rate environment, but if you go back to, the mid-1980s, my first mortgage in 1984 was 13.75%. So
6.5% doesn't sound so bad right now.
Not so bad.
Hey, Frank, we only have a minute left, but I want to make sure to get this question in. Are the companies that you support, the small businesses, are they still having as tough a time getting labor?
I would say as of today, yes, labor is an issue. And I think this is the big thing. This is the big test that the Fed is looking at to see when does labor actually roll over. It is still difficult to hire most of the labor that's required to run a lot of these small businesses. I think it's getting better, but it's still difficult as we sit here today.
Okay, so there's a ways to go. Hey, we love chatting with you, Frank. Really appreciate you taking the time and joining us on Bloomberg Business Week this afternoon. Frank Sorrentino, Chief Executive Officer at Connect One Bank. They've got branches in New York, New Jersey, a new one in West Palm Beach as well. Joining us this afternoon on the phone from Washington, D.C. Well, joining us on the phone from New York City. Let's now get to Washington, D.C. for an update on world and national news. For that, we go to Nancy Lyons. Hey, Nance.
Thanks, Tim. U.S. Secretary of State Antony Blinken says Russia cannot be trusted. He's calling on every UN Security Council member to condemn Vladimir Putin for his nuclear saber rattling over Ukraine.
Every council member should send a clear message that these reckless nuclear threats must stop immediately.
In a speech to the UN General Assembly, Blinken said it was just months ago that Russia signed a UN statement affirming that nuclear war can never be won and must never be fought. Russia's foreign minister also spoke at the UN today and denied any responsibility for war crimes and instead blamed Ukraine for atrocities. Attorney General Merrick Garland is going to have to make some tough decisions about whether Donald Trump will be the first former U.S. president to be charged with a crime. We get more on that from Bloomberg's Amy Morris.
Garland's decision will likely shape American politics and the boundaries of law enforcement. Officials say the Justice Department likely already has enough evidence to support indicting Trump for obstruction. The probe into whether he compromised sensitive national secrets could also set up a prosecution decision after the November 8 midterms. Any decision by Garland is sure to stoke political passions in the coming presidential race, and it could set a precedent for whether criminal law extends to presidents. In Washington, I'm Amy Morris, Bloomberg Radio.
A new poll suggests there will be a record turnout for November's crucial midterms. Roughly 64% of respondents in an NBC News poll said they had very high interest in the midterms. A similar poll conducted in 2018 found only high interest among 58% of respondents. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Thank you so much for that update, Nancy Lyons. Really appreciate it. Tim Stanovic and Katie Greifeld were live in the Bloomberg Interactive Brokers studio right now. This is really interesting. So we're talking about the return to the office, Katie, and reasons why people, want to work from home. A lot of them have to do with young kids. They get to actually drop their kids off at school. They get to be around for, sporting events after school. Mm-hmm. They don't have to worry about the commute. Interestingly enough, we're starting to learn other reasons why people want to stay home, and we're finding that menopause is another reason employees want to work from home.
This was a really interesting survey. So nearly half of female workers between the ages of 40 to 55 have contemplating looking for remote jobs so they can more easily deal with menopause symptoms. This was a survey commissioned by fertility benefits company Carrot. Again, 47% of respondents said that they would consider looking for remote or hybrid work because of those symptoms. Nearly a third of the women surveyed said that they'd think about shifting to part-time from full-time work, while 22% said they'd consider retiring early.
Well, Carrot surveyed 1,000 U.S. female workers between the ages of 40 and 55 that were either undergoing perimenopause or menopause or had in the last 5 years. Women between the ages of 45 and 54, they make up 20% of the female workforce in the U.S. Many will experience the loss of sleep, mood swings, and hot flashes associated with menopause and perimenopause. Very few workplaces actually offer support.
Last year, a survey of 2,500 women from telehealth company Genève, gosh, I hope I said that right, found that 99% of women in this stage don't get any menopause benefits at work. Almost a quarter of respondents to Carrot's survey said that they've taken time off of work because of their symptoms, but actually they hid the reason from their employer, Tim.
Here, this is actually really interesting in addition to the data that we got. Some governments and companies have actually started to recognize that this is an issue for their senior leaders. The UK government has a menopause task force. Japan also has begun to confront the issue. There's very little discussion, though, how it hurts women in the workplace here in the U.S. Check out this story and more on the Bloomberg Terminal and at Bloomberg.com. You're listening to Bloomberg Business Week on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Headline from the Bloomberg Professional Service. Boeing will pay $200 million to settle SEC claims surrounding the 737 MAX jet. Costco reporting earnings per share for the fourth quarter that beat the average analyst estimate. We also heard from FedEx. FedEx says it expects to save as much as $2.7 billion this fiscal year through wide-ranging cost-cutting measures in response to weakening business conditions. Shares of FedEx up today by about 0.8%. Jana Partners has a nearly 10% stake in Freshpet, that according to the Wall Street Journal. Treasury yields hit multi-year highs. Stocks fell today as a parade of central banks joined the Fed in boosting rates to curb scorching levels of inflation. The 2-year yield 4.11%, the 10-year 3.70%. Stocks lower today in a volatile session with the S&P down 31 points, a decline of 0.8%. Dow Industrials today tumbled by 107 points, down 0.4%. Nasdaq was down 153, a drop there of 1.4%. Spot gold down 0.1%, $16.71 the ounce. West Texas Intermediate crude up 0.7, $83.49 a barrel. Again, recapping that 2-year worth, repeating 4.11%. Spot today we had the S&P down 31, down 0.8. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thank you so much for that update, Charlie Pellet. Really appreciate it. Well, the New York Comedy Festival is back. It's happening this year, November 7th to 13th, and it's set to feature more than 200 comedians, including Bill Maher, Wanda Sykes, Tracy Morgan, Conan O'Brien, and many more familiar and new names as well. We're very pleased this afternoon to have with us Caroline Hirsch. She's the founder and owner of the legendary Caroline's on Broadway. She's with us right now in the Bloomberg Interactive Broker Studio. We're going to talk New York Comedy Festival. We're going to talk the Stand Up for Heroes fundraiser as well. Caroline, how are you?
I'm good. How are you?
We're doing well. Hey, it's really good to have you here in person. We did this a year ago, but you joined us on the phone, even though you were doing an in-person comedy festival last year. How is this year different when people are more comfortable going inside?
Well, I think we've all become a little more accustomed to going out.
I think we all got
shows.
COVID, so yeah, it's like now we're all super immune.
Everybody, I have not, but almost everybody has had COVID. Get it over. You know, we were really happy last year that no one got sick during the festival because that was the wave that was coming through.
So it was like post-Delta, pre-Omicron.
Pre-Omicron was coming through at that time. And we were very lucky we didn't have to cancel and everything. And everything was pretty good last year. So we're expecting this year to be even better. So we have, you know, over 200 shows around New York City. Over 200 comedians, that's for sure, even more than that. And tomorrow we announce a whole group of all of the little smaller creative shows around the city. And you can go to NewYorkComedyFestival.com and look up those shows. And our headliners this year, Bill Maher, Joe Coy, Wanda Sykes, Tracy Morgan, J.B. Smoove.
Huge names.
Huge. Jimmy O. Yang, Nurse Blake.
Nice.
Now, do you know anything about Nurse Blake?
I don't know Nurse Blake.
Okay, Nurse Blake.
I knew everyone else on that list, though.
Came around during COVID.
Okay.
This person is an actual nurse, started creating videos, and has this following of everybody in the health industry that go out to see him. So he's at Town Hall on November 13th, the festival on Sunday night. And look him up. No, you have to. It's really, all the nurses are coming out.
I'm sorry to jump in, Katie. I know you have a question, but I wanted to ask how new comedians kind of go, rise through the ranks in this day and age, because it's not like it was 20 or 30 years ago. It's, YouTube, TikTok, Instagram. You can build these followings online. Are you seeing that when you look out across the landscape right now?
Well, we see that with Nurse Blake. What we also see is somebody recording their own special and then putting it out and getting, millions of views on it. I mean, what could be better than that?
But you're not talking about someone like Louis C.K. who's been doing this for years.
No, I'm talking about like a Sam Morril, somebody like that, who's able to put himself out because nobody would give him a special. He puts himself out and now has this big following.
They have these direct relationships with people around the world through social platforms and through
is that what Bo Burnham did? Didn't he do something similar?
No. Well, Bo has been around for a long time.
Yeah.
I mean, he was with Comedy Central for a long time.
That's true.
Yeah, he's
that's
done
true.
stuff.
I'm thinking about his pandemic.
He's been directing now too.
Yeah.
So that's he's in the directing mode. But it's wonderful how the socials have helped everybody, obtain an audience. So that's the good thing. It's very,
So compare and contrast what you're expecting this year to last year, because last year it was in person. Like you said, you managed not to have anyone get ill. Are people who attended last year who are attending this year, should they be expecting any sort of different experience?
No, I think we have more. We have more to experience this year. And, there's really something for everyone. From Joe Coy to Tracy Morgan to Jimmy O. Yang to Wanda Sykes. I mean, Miss Pat is at Caroline's. She's wonderful. She has a wonderful story to tell. You should make a reservation, go see Miss Pat at Caroline's. I mean, we have so much for everyone, and we're dotting all the boroughs, trying to be democratic and to be everywhere in the city this during this festival.
Okay, it's one thing to know the headliners, the Bill Maher's, the Wanda Sykes, the Conan O'Briens, and more. But what about the up and comers? And how do you identify those as a consumer?
Okay.
I have two questions. One, how do I identify them as someone like me? Like, if they're at the New York Comedy Festival, okay, they went through some sort of filter, right? So it's going to be good. But for someone like you, how do you identify these people?
Okay, so we watch and we watch. In this day and age, we get to see everyone, whether in California or just living in St. Louis. They will send a YouTube clip in or a clip of themselves at a club, and we choose who we want to be on New York's Funniest. So New York's Funniest this year will be held at the Hard Rock Hotel. It's one of our partners during the festival. It's the place to stay when you come to the New York Comedy Festival. Go stay to the Hard Rock on 48th Street. Wonderful new hotel. And we have New York's Funniest. So during the year, we pick people out. Now, the people that have won in the last few years is Michael Che, Ricky Velez, Michelle Wolf was involved, Tim Dillon was involved. So you see, we were
These are all big names.
Big names now.
Big names, yeah.
Big names now. So when you come through that filter of New York's, Funniest, you really made it and you're on your way.
Well, to the discussion of social media and TikTok and people being sort of able to launch their own sort of followings, do you have a team that's just scouring social media?
We have a team that scours shows constantly.
Is the team you, or is it more than just you?
No, it's more a team effort of everybody there. It's Greg Charles, it's John Moran, it's Louis Ferranda, it's Andrew Fox, it's everybody that we all work together, and it's like we all share information. Hey, did you see that Instagram? Did you see this? Did you see that? So.
Okay. Well, it's not just funny, but it's also a time for partnering with an important organization that I know is close to your heart. So I want to hear a little bit about the Bob Woodruff Foundation and how the New York Comedy Festival is partnering with Stand Up for Heroes to help honor our nation's veterans.
So Stand Up for Heroes takes place on Monday night, November 7th, at the new David Geffen Theater at Lincoln Center. And of course, Jon Stewart is back again, and so is Bruce Springsteen. And we have a number of Elisa Schlesinger's on the show, Hassam Hussein, the Lumineers. So we have a group. It's a great variety of comedy and music. And what we do is that during this event, which it's in its 16th year, we come out and honor the troops that have fought for us in the last war in Iraq and Iran. So this is to honor them, and this is to raise funds to take care of them. We think the war is over. There's no war over. We have more troops around the world than we've ever had, and these people need to be taken care of when they come back.
Yeah, you think of a name like Jon Stewart, for example, who's just been so active on Capitol Hill in getting benefits passed for our veterans. What role does he take in this, just in the last 30 seconds that we have with you? Is it one of an advocate or is it one of a comedian?
It's a comedian and advocate, and just there to stand up for everybody. I mean, John's been a trooper. He's been great. He's just been wonderful.
Caroline Hirsch is the founder and owner of Caroline's on Broadway. She's with us in person in the Bloomberg Interactive Brokers studio. Caroline, good to see you. Good to have you back in person. We are looking forward to the New York Comedy Festival. More than 200 comedians performing 100 shows across all 5 boroughs, November 7th through 13th. That is going to do it for Bloomberg Business Week on this Thursday, September 22nd. We'll be back tomorrow. A big thank you to Katie Greifeld for filling in for Carol Master. And a big thank you to the entire team at Bloomberg Radio.